This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about that ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. 2 days in a row. Can't stand it, Paul. I went as private credit last night.
Did you? How'd that go?
Doors slammed in my face.
Exactly.
Lisa, what did you go as last night?
What did I dress as?
Yeah, what did you go as last night?
I was asleep. As I was leaving for work, my son was coming back from a party. So that's how it works
That's
nowadays.
good.
That's how it works
That's
in
good.
the
The
sales
2 a.m. thing.
Yes,
yeah,
exactly.
thank you, Coors
Good
Light,
job for your son.
all that love. Paul, what a day. Busy news flow. Looking back at earnings, looking forward. Valerie there with the petrochemical companies coming in here, Exxon and Chevron. But it's Jobs Day is a non-event.
I don't know how to play it. We're going to defer to a lot of the economists out there. There's hurricanes, there's strikes. Right now, the headline number, Tom, change in non-farm payrolls, the consensus is 100,000.
Yeah, I think what we're committed to here, folks, with the great guest lineup we have today, including Zenter and Claudia Sahm, around 8:30, we're really going to steer the conversation forward. Not so much to election. I don't care who Claudia Sahm thinks is going to win.
Right.
But what will the economy be like on that path to the inauguration?
Yeah, coming out of next Tuesday, kind of what is the economic impact? Maybe a potential change here we've got in the administration here. So global Wall Street certainly paying attention, and we will as well.
We will see. It is Friday, and a lot going on. I got some real choice words on Apple and the coverage on. Of course, Amazon lifting as well. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
And we've got green on the screen at the end of a really volatile week. Mixed earnings, big tech companies had the market on the defensive. Amazon, Intel shares, they're higher. Optimistic earnings results. We have Amazon up 6%, Intel up 5%. Apple shares over on the other side, they're lower, down 1%, reporting softer demand in China. So right now we have NASDAQ futures up 0.4%, 91 points. Dow futures up 0.3%, 153 points. S&P futures up 0.3%, or 22 points. We have the 2-year yield, 4.18%. That's up 1 basis point. The yield on the 10-year, 4.29%, and that is little changed. October was the worst month for treasuries in 2 years. Just a side note there. A big day for oil companies. Exxon up 1%, beat estimates for third quarter earnings. Higher oil production from the Permian Basin. Will that help cushion a drop in crude prices? And Chevron, just about similar news there. Their shares up more than 2%, but it also indicated potential U.S. job cuts, part of a $3 billion cost-cutting plan. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Our election coverage as we move forward here. Joe Matthew, Kaylee Lyons leading that off, 5 p.m.-ish. You're going to see that Tuesday night. Then John Farrow and Anne-Marie Horton teaming up with Joe and Kaylee to give you a really interesting conversation and perspective. Somehow I think David Gura will be in there.
I think he'll probably be in the mix here. David Gura was just out in Wisconsin. Now he's going to be heading over to
Pennsylvania.
Pennsylvania. Check out some cheesesteaks.
I said, what's the
Philly?
path? And he said, well, I'm going from Yingling Beer over east to Rolling Rock.
Yep.
And
That's
then
how
I think
do it.
he's in Schaefer country.
That's
when he ends up.
Philadelphia. Nothing better than Pennsylvania,
Pennsylvania
Pittsburgh,
beer.
Philadelphia, all those great towns.
Someone who's tried all 3 beers, Yingling, Rolling Rock, and Schaefer, is Philip Orlando. He and I are the only ones on the planet that remember Truman Dewey. We're thrilled to have Phil Orlando with Federated with us. Phil, do you actually care about the politics in terms of a 3-year view of what to do with my retirement plan?
No. First of all, good morning, Tom. Thank you very much for having me back on the program. The answer to your question is no. That stocks over the long term up and to the right. You look at the combination of different parties having different levers of power in Washington over the last century, and over the long term, stocks go higher. Now, we can argue whether or not this policy or that policy is better in the short term, but the reality is you've got to be in it to win it. And clients that are saying, my guy, my gal's not going to win, I'm going to load up on gold, canned goods, ammunition, sell my stocks, and Yingling beer and hang out in the bunker I've built in the basement. That's a mistake. And we've been encouraging financial advisors to try to keep their clients invested in the market.
Why do we start with Phil Orlando this morning? You just heard it, folks. I really want to emphasize here, he is with Federated Airmanis with all of their focus on Western Pennsylvania. Paul, the heritage of Federated out of Pittsburgh with their advent of the money market fund years ago.
Absolutely. Pittsburgh, one of my favorite all-time towns. Let's talk volatility, Phil. I mean, Tom keeps us focused on the VIX here, and we're over 22 on the VIX here, and that's up from we were kind of well below 20 just a few months ago.
Cash.
What do you make of volatility here?
So this is a theme that we've been writing about, Paul, for the last couple of weeks, that the VIX over the last 3 months has more than doubled. You've gone from 10 to 22. Benchmark 10-year Treasury yields over the last 2 months have gone from 3.5% up to 4.3%. Both of those suggest that there's some volatility and concern out there in terms of the economic data, Federal Reserve policy, election uncertainty, et cetera. The equity market is the outlier. They didn't get the memo. And stocks have been up 15% or so since their bottom in early August to their peak, their 47th record high of the year, just a week or so ago. So our view is that given the surge in the VIX, the increase in Treasury yields, there's roughly a 20% overvaluation in the S&P 500 in the near term. And our view is that we could see some chop and volatility here in the fourth quarter of the year. Maybe stocks would pull back to the 200-day moving average. That would imply roughly a 5 to 10% correction. So we've been a little cautious here on stocks, in part because of that spike in volatility.
Phil, what do you make of earnings so far here? We had some big tech names this week. I think pretty solid numbers. We had the big banks, really strong results here. What do you make of earnings, and are earnings enough to kind of continue to support this market?
So earnings have been okay, but below on a quarter-over-quarter basis, the 11.5% gain we saw in the second quarter overall. The bigger story, I think, is the shift that we've seen with the deceleration in earnings growth from the Mag 7 names. In the fourth quarter of last year, the Mag 7 names were up by 60%, 60% year over year. Those numbers slowed to 50% in the first quarter, 33% in the second quarter. We think that the third quarter, the quarter that's being reported now, we're going to end up somewhere in that 15 to 20% neighborhood. Yet the earnings on the forgotten 493, which were negative by 2% in the first quarter of this year, we think they're going to end this year up in that 15 to 20% neighborhood. So there's a changing of the guard going on with earnings. We think stock prices should reflect that.
Yeah, Phil, give me long term. I mean, a lot of people have been in bonds. They were way underwater. 6 standard deviations is my chart of the year. And there has been a bond recovery. I mean, let's admit it's been extraordinary. But people sort of say, okay, what's my long-term return in stocks? Is Phil Orlando popping high single digit? Or do we have to get to a mid-single digit? Or David Kostin over at Goldman Sachs, 3% return on equities? Which is it?
So directionally, we agree with Goldman in terms of the fact that the market, think about it, Tom, from the bottom of the COVID pandemic in March of 2000 to where we were a week ago, the market has roughly tripled. So that will take away from the longer-term returns. That said, again, we think stocks are a little bit ahead of themselves here. We think we're going to get a pullback. But as we look out over the next, 3 to 5 years, we could see something in the up 8 to 10% neighborhood on a year-over-year basis. So not nearly as strong as the market's tripled in the last 4 or 5 years, but not nearly as bearish as Goldman's 3%.
So, Phil, what are the sectors that are screening well for you right now?
So we think that if we're right that there's a 5 to 10% correction coming, and we think we're in the early stages of that these big growth and technology names could be down 10 to 20%. As that money will come out and disproportionately move into the areas that we think were left for dead over the last couple of years: domestic large cap value, small cap, both growth and value, and international with an emerging markets focus. We think those stocks will be flat to up as these growth and technology names are down 10 to 20%.
Phil Orlando, great to start our show off this morning with you on this Jobs Day Friday. Mr. Orlando, Federated Hermes. Futures up 19, nice lift to the market. Dow futures up 137, up 0.4% on the NASDAQ 100. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. 4 days are left until Election Day. Former President Donald Trump held an event in Glendale, Arizona last night in a conversation with Tucker Carlson, attacking his opponent, while Vice President Kamala Harris campaigned in Las Vegas.
She's a low IQ individual. She doesn't even know she's lying. I'm telling you. This is not what you want for your president.
I pledge to you, if you give me the chance to fight on your behalf as president, there is nothing in the world that will stand in my way.
Meanwhile, Georgia's Secretary of State says at least 3.6 million residents, or half of active voters in the state, have already cast their ballots as early voting ends today. Words of warning for North Korean troops training to fight for Russia inside Ukraine. The U.S. says those troops will be treated the same as Russians by the Ukrainian military. Secretary of State Antony Blinken says around 8,000 North Korean troops are now stationed in the Kursk region of Russia.
Russia has been training DPRK soldiers in artillery, UAVs, basic infantry operations, including trench clearing, indicating that they fully intend to use these forces in frontline operations.
Secretary Blinken says they expect Russia to begin mobilizing these troops in the coming days. North Korea is boasting that its new intercontinental ballistic missile is the world's strongest, a claim seen as pure propaganda after experts assess that as it being too big to be useful in a war situation. The ICBM launched Thursday flew higher and for a longer duration than any other weapon North Korea has tested. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Hey, Michael Barr, thanks so much. Paul, I don't know what the analog is to Apple. I go back to like the Hong Kong merchant banks of the 19th century, Jardines and all that. But I'm absolutely thunderstruck, and this comes off the CFA, of the income statement centric analysis of any given stock versus the profit analysis and how profit is distributed over to the balance sheet. I sat there in awe last night of this profit machine, Apple. You and I have never seen this in our lives.
No, I mean, I'm just looking at the
it's
FA.
Original.
Yeah, Tom, at the FA screen on the Bloomberg terminal shows, $111 billion of net income this year, going to $119 billion next year. But the free cash flow is more than the net income. They're going to have $120 billion of free cash flow this year. Just extraordinary.
Shares at the peak of 2012 were 26 billion. 26 billion shares are now under 16 billion shares and moving down methodically. And then you look at the margin expansion, which nobody talks about. Never did I expect any company, and particularly an aircraft carrier like that, to expand margins as they have from 37 out to 40-something.
Yeah, it's extraordinary here. The revenue, I think, concern, the stock's off a little bit today. A little bit lingering concern about China here. I mean, it's a competitor. It's 20% of the revenue is China, and there's growing competition there, so there's concern by investors.
Well, China's a big worry there. They move manufacturing to India, and also, of course, the sales revenue across Asia and Japan maybe picks up some of that China weakness. But nevertheless, there is the China angst. It is Jobs Day from New York City. Stay with us. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Interactive Brokers Portfolio Analyst. Consolidate and analyze all your financial accounts on one powerful dashboard for free. Sign up for Portfolio Analyst at ibkr.com/free PA. All right, futures rising ahead of today's key U.S. jobs data, next week's U.S. election as well. Today's payroll report could show job growth weakening after inflation measure favored by the Fed yesterday. Well, it posted its biggest monthly gain since April. Policymakers meet next week. We'll also get ISM manufacturing later this morning. NASDAQ futures up 0.4%. We have Dow futures up 0.3%. Same for S&P futures. The 2-year yield 4.19%. That's up 1 basis point. The yield on the 10-year 4.29%, and that is little change. To currencies, we have the dollar stronger. The Japanese yen weakened after climbing as much as 1% against the dollar yesterday. Right now at 152.63 against the dollar. The euro weaker. British pound stronger. Right now we have Bitcoin up about 0.2% at around 70,000. Shares of Boeing up 2%. The company union leaders, they reached a tentative agreement that could boost wages by 38% over 4 years, give workers a $12,000 signing bonus, but it still does not reinstate those defined benefit pension plans. Members vote on Monday. Nomura Holdings quarterly profit more than doubled from a year earlier, beating estimates, but it's being overshadowed by a number of scandals, so those shares down 2% in Japan. And finally, shares of Abbott Laboratories, Reckitt on the rise. Abbott up more than 4%, Reckitt up more than 8% after their first victory in a baby formula trial. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Greatly appreciated. Phil Orlando with us, giving us the view. Phil's basic message is you got to be into play.
Sure. In it to win it. He said he's been consistent that way.
Ian Lingan over at BMO Capital writes these treaties. They're like biblical. They're like 6 pages, dense, and all that. George Borey knows how to use a tab button on the keyboard. He writes these brilliant tabbed talking point ideas in fixed income so you don't screw up. And I'm sorry, Paul, George Borey at Allspring, his last tab is the most important one. Stay very liquid and nimble. George Borey, why should we stay liquid and nimble in fixed income?
Tom, Paul, good morning. Thanks for having me on the show. Really appreciate it. Nimble matters. The bond market today is very different than the bond market we've seen over the last several years. Volatility is high in bonds. That's a good thing and it's a bad thing, but it's really, really important to stay nimble. And nimble means being able to move your position around. And bond investors, some bond investors like to do what we call set it and forget it. Just let my coupons work quietly in the background. That works at times. In today's market, it's not the best strategy. You need to be able to move your bond portfolio around. Just look at what happened in October. Bond yields, 10-year treasuries went up about 50, 55 basis points or so. And we know that when bond yields go up, prices go down. And so the aggregate mark-to-market return on bonds were down about 2.5% in October. That's a pretty challenging sort of environment for bond investors. And it really took away a lot of the year-to-date gains that many investors have looked at. Now it wasn't evenly distributed, so it didn't happen everywhere. So there were spots to hide out. But generally speaking, when you see those kind of price movements, you need to stay liquid, you need to stay nimble, and you need to be prepared to move your portfolio around.
Sounds like it's perfect. It's triple leveraged all cash.
Yeah, exactly.
Ready to move.
Right in your wheelhouse, Tom.
Yeah.
U.S. high yield credit, George, has been the best performing sector there. I'm a little surprised by that, given investors concerned about recession here, recession there. What do you make of the high yield market?
Yeah, bond, lower rated credit. So bonds that are issued by, different types of companies with different, arguably a little bit more risk, have done very well this year. They did well last year. And it's a reflection of the underlying economy. There was some concerns earlier this year that we were going to see another wave of slowdown. We did see a modest slowdown, and now things are reaccelerating. So high yield as an asset class is doing very well. And in our opinion, the most important thing, the most important component of high yield is it's that coupon flow. And as a bond investor, you make most of your money by the income you get from the bonds. And it's that income stream combined with the reinvestment of that income stream. And as long as you can preserve your sort of capital that's invested, you do very well over time. And so with bond yields in the world of high yield, anywhere from say 6.5 to 8.5%, which is a fairly generous yield in this environment, if you compound those through time, you're doing very well. And you can weather the type of volatility we're seeing in the treasury market, where bond yields are jumping sort of all over the place. When we look at the high yield market, prices are fairly stable. There's not a lot of duration, meaning you're much shorter on the curve. So you don't have a lot of that price sensitivity to treasuries. The economy is doing well, so those coupons are being paid pretty consistently. And then just lastly, that sort of ongoing reinvestment is really, really powerful for a bond investor. And so when we look at the bond market today, what we say and what we see is a bond market that's generating bond-like returns. And that's anywhere from, say, 2% on the low side to positive 8% on the upside. And that's high yield is very close to the upper end of the range, and longer duration, higher quality is towards the lower end of the range. But the bonds are doing exactly what they're supposed to do. That's that steady stream of income.
Can we review, Paul? And Bori nailed this, in that in a 6 standard deviation decline of price, he said it's going to come back. And in the last 18 months, it's been an act of God how it's been price up, yield down.
Yeah, exactly. The 2-year at 4.19% here. George, what do structured products mean to you, and why are you overweight structured products?
Yeah, so structured products is just a fancy way of saying it's a very defined stream of cash flows. So you go out, you take a whole load of receivables, or you take a whole load of mortgages, sort of plans to pay back money. You package them up, and then you borrow money against that stream of cash flows. Nice little technical strategy in the world of bonds, but those defined cash flows, they're very clear, they're very consistent, and most importantly, they're very persistent. And so as a bond investor, I like consistency. I want to see that cash flow coming to me on a very regular basis. You mentioned the economy before. The economy is doing very well. A traditional corporate bond is going to be heavily linked to the economy. So growth up, growth down, my cash flows are going to move around a lot. With a defined set of cash flows like mortgage-backed securities, there's a high degree of consistency of that cash flow. That works really, really well in this kind of environment. The ratings are attractive. There is some risk premium in there, so I get a little bit of extra yield, but it's that persistence of the cash flows that works really well in a bond portfolio and looks fairly attractive right now.
George, thank you. George Bori with a brief there from Allspring today on this Jobs Day. Greatly appreciated on fixed income. Claudia, Sahm, and Ellen Zenter coming up on Jobs Day. I thought Tom Purcell yesterday, Paul, was great about, like the wage dynamic here, and he's pulling it back a little. He's saying, it's just not going to be the buoyancy that maybe we've seen in 22, 23, and into 24.
I'm looking
24 is almost over.
I know. I'm looking
Have you made plans for Thanksgiving?
Oh, of course. We're all set to go.
It's November 1.
We got it all
Jets
locked down.
won?
Yeah, exactly. The Jets won the game. Go figure. And they were actually favored. I can't figure out how Vegas figured they were favored. But once again, Vegas was right. They figured this stuff out. I'm looking at the average hourly earnings coming up here, Tom. 0.3% on a month-to-month basis. That's an increase here. On an annualized basis, average hourly earnings up 4%.
Yeah, we're going to have to see. We're going to go beneath the headline data. That's in 1 hour, 4 minutes, and we'll do that. But I really want to quiz Dr. Sahm and Ellen Zenter of Morgan Stanley. Sort of, we'll do Jobs Day with all the hurricane noise and all that. But I really want to go forward into their view into I think this is the first time I've said this, Q1 2025.
Oh, boy. Yep.
It's November 1.
It's coming. It's coming up. Sure, why not?
We're here.
We're here. I mean, it's just ripping. Although I was in the ocean yesterday. That's how warm it was on the Jersey Shore.
Yeah, for those of you worldwide, it's amazing the weather. We have a drought. It's serious.
Yes, it is.
Good morning to serious first responders of fire.
Thank you.
Across all of New England, the 92.9 area, and then going down to Washington as well. But it is beautiful out. We'll have much more on that. Futures advance. Lisa Mateo moving the market higher. This is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. S&P futures edging higher right now, up about 0.3% with the benchmark on track for its worst weekly performance in more than a year. That's due to skepticism over the outlook for artificial intelligence, cloud computing after results from the likes of Microsoft and Meta. Both companies now seeing a bit of a rebound this morning. We have Microsoft now up nearly 1%, Meta up about 0.5%. We mentioned S&P futures. Now let's go to Dow futures, up 0.3%. We have NASDAQ futures up 0.4%, or about 92 points. We have the 2-year yield, 4.19%. That's up 2 basis points. The yield on the 10-year, 4.29%, and that's up 1 basis point. To commodities, oil gaining due to renewed tension in the Middle East. Right now, we have Brent crude up more than 1.5% at about $74 a barrel. WTI crude, $70 a barrel. We have spot gold up about 0.3% at $2,752 an ounce. A few companies making news. Well, Warren Buffett's Berkshire, well, it acquired 60.7 million shares in SiriusXM. That's taking its stake up to 33%. And finally, sources say Sony approached CBS early this year after an offer greater than 9 figures to buy out its Wheel of Fortune Jeopardy distribution deal. Sony's TV arm, well, yesterday it sued CBS, saying that it breached terms of their contract. That is a Bloomberg Business Flash. Tom and
Is that because Pat Sajak had those tickets for the World Series?
Exactly. Right behind home plate.
Right behind home plate. They're like, what is that? Let's sue somebody?
Oh, my goodness.
His tweet. Did you see his tweet? I'm still alive.
Yes, he's still alive. Yeah, I'm not. Yeah.
Good morning to Mr. Sajak. And somebody sent me a photo of this lovely lady at a bar who went as the guy who took the ball out of Mookie's
was that right?
glove. Thank you. I don't have it in front of me. I'm so sorry, but that was just lovely. Here's the problem, folks. You go to the Bloomberg, and you look at an equity fund, and you can go, do fancy CFA, talk the Sharpe ratio and the R squared and all that. Bonds are a mess. Joining us now with an incredible DES screen, the Core Plus Fund at JP Morgan with a really solid 1-year Sharpe ratio in the gobbledygook of the bond world with the Core Plus ETF. Priya Misra joins us now from JP Morgan as well. How have you guys done it the last year to generate a constructive Sharpe ratio versus the bond morass that's out there? Give us a look back on how you got here.
Sure. Thank you for having me, Tom, and thank you for bringing up Sharpe ratio, because I think a lot of people look at yield and you're getting 5,
The Yankee
6.
Sharpe ratio is not that good. Sharpe ratio, folks, is a measurement of risk and reward. Go.
Exactly. So that is what we look at all the time. So, if you remember a year ago, interest rates were rising, and that was not a time we liked duration. But as we got closer to year end, and it looked like the Fed was not going to hike, and actually the Treasury also started to cut back on issuance, duration risk made sense. But the biggest contributor to our return and our Sharpe ratio has been a high quality spread product, whether it's securitized credit, whether it's corporate credit, both investment grade as well as high yield. We're in a soft landing. We saw this. We said, you know what? These yields are going to attract people. Fixed income has income as well as the hedging property. That Sharpe ratio in a portfolio sometimes is given by bonds. And so we've been overweight spread product in different forms. It's been a very diversified bet. So when you've had times when, one sector's done better than another sector, we've got that spread product and then duration on and off.
I did a panel with Bob Michael. He runs a bond portfolio down Park Avenue, and I was working out my chart of the year, which is the Bloomberg Total Corporate Return Index, back 20 years, whatever. There's a log trend. And the answer is the carnage was over 6 standard deviations. It was like a medical chart. And the number one story for me this year is not equities, not the election, it's the bond recovery. Will that continue, price up, yield down into 2025?
So that's the multi-trillion-dollar question. I'm more constructive on spread. The spreads, I do have a lot of confidence will stay tight, because I look at corporate America, I look at the household sector, companies households did the right thing. They locked in low level of rates. They're not that impacted. The Fed, we do think, is going to cut rates. Where I struggle with is duration, because as you know, there's a big election coming up. And depending on the outcome of the election, if we do have a scenario where there's a lot more fiscal stimulus, you can see the Fed not cutting as much. You can see a lot more debt supply, which the market will price in. So when you talk about price up, yield down, well, if those yields are going up, overall total return of bonds may struggle, but it's all dependent on which way the election goes. I think the market's going to run with the 2016 narrative, which I would say it's a very different environment today compared to 2016. So we should be careful, but there's this knee-jerk reaction. So, putting the election aside, when we look at top-down as well as bottom-up of companies and households, it's actually very strong. So I do think spreads stay at the tighter end of the range. I think duration is where I'll tell you in a week or whenever we know the outcome of the election.
Priya, we've got a Fed that's cutting rates. They cut rates by 50 basis points. Yet my 2-year Treasury, I don't know, it's like 4.2%. It was like 3.6% just a month or so ago. What's that? What's going on there?
So I think that this tells you there's a couple of things. Number one, the market had priced in a little over 25 basis points. Now, the Fed delivered more, so that should have meant lower rates. But literally right after the Fed cut rates, we started to see, we had that one very strong payroll report with upward revisions. And we have another payroll report very soon today. So we'll see, is the economy re-accelerating? I think the market's starting to price this risk that we might be re-accelerating. I don't agree with it. I think data is mixed. It's not slowing as aggressively as it looked the previous two payroll reports. I don't think it's re-accelerating either. But the reason that 2-year has risen is, despite the Fed telling us that they're on a path to gradual cuts, is this risk that maybe there's going to be more fiscal stimulus, or the economy may be re-accelerating here, and then the Fed doesn't have to cut as much. And that's why that end point, we focused a lot on the next meeting, but I look at the totality. When you talk about the 2-year, the totality of rate cuts, we were pricing in 3% end point after the rate cuts. Now we're closer to 4%. That's really? What's changed in the last month. Because there's just a lot of uncertainty, and if you're not sure whether the Fed will do anything, you don't want to put a lot of risk on that front end. So there have been no buyers. And I think that once we get today, let's see payrolls and let's get the election out of the way, I think that front end starts to look very attractive, because I think inflation is still telling you the Fed's going to keep cutting.
So if the Fed's going to keep cutting, do we have 25 basis points next Thursday and then maybe a similar amount in December? Is that how you're thinking about it?
That is our base case. We see a couple more 25s and then a slower pace of 25s until about 3 or 3.5, somewhere in that range for terminal. I think the market, though, depending on the election outcome, might reduce the totality of cuts. But the next few cuts, remember, the Fed believes, and I think they're right, policy is restrictive. So cutting for the next, I would say 100 basis points, we can debate whether it's 50 or 100, would still be in the normalization path. They don't need to move into accommodative territory. That's really the question for cuts next year.
And the mathematics of this, out of Lady Sriram in Delhi, you've got the mathematics nailed. There's a vector out there to a terminal point. Is your terminal point, within the language of John Williams, 2.0? Do we run below 2 and get back into the deflation, disinflation angst of 15 years ago? Or do we have to reset higher than 2.0?
I do think it's a little higher than 2. I think 2 was the terminal neutral rate, in the last cycle. I think we don't have a balance sheet recession, which we did in 2008. So the starting point of the economy is stronger. We have a lot more activist fiscal policy. There wasn't much fiscal stimulus.
Is that beneficial in the world of bonds and activist fiscal policy? Are we doing MMT right now? It's Friday. I got to make some news here. Come on,
I wouldn't say we're in MMT land just yet. I think when the economy slows down, we saw it in the pandemic, the government stepped in with significant stimulus. I think it takes the downside of the economy out. Is it good for bonds, you ask? Well, it's good for corporate bonds. It's good for spreads. Is it good for duration? No. But the market starts to price that in, and that's why that terminal rate question is closer to 3.
So the yield hogs, listen to this program. They're good for duration is 20 years, 25 years, some housing piece in New Jersey. Yeah. What's Priya Miser? When you say duration, belly of the curve, or are you in even tighter than that?
No, I would say 5 to 7 year would be the sector. I think you start going too far out, you should get paid more for giving the government money for 20 years. You should get paid a little more. So I think the curve can steepen. So, but the part of the curve I like is 5
I need
year.
yield because I got to go to the package store in my Vespa, right?
Exactly.
Is that how it works?
That's how it works. Are you taking credit risk at JP Morgan Asset Management?
We are. We think we're in a soft landing.
Okay.
We like corporates. We like parts of the household sector. I think there's just a lot more dispersion. So you just buying credit, I don't know. This is where active management comes in because we're seeing dispersion within companies.
No one's listening. So if Minnesota Mining and Manufacturing issues a corporate piece, 10-year piece, do they just make one phone call to Priya Misra? I mean, what's the power of JP Morgan in getting price up, yield lower on a new issuance?
Well, I'd like to say that they listen to the market, that they look at all the investors.
Well, she's well-trained.
But I will say we're seeing significant inflows into bond funds. And so any company, household, I mean, you have to stomach those yields. You have to make the yields work. But once you look at the demand for bonds, I think people are coming into bonds.
20 seconds. Would you buy Mag 7 debt, newly issued Mag 7 debt by Amazon, Microsoft, Apple, and the rest?
They're tight. So I would wait for a better level to buy. We're finding better value elsewhere.
She's never coming back, Paul. That's how they're. Priya
us.
Misra, thank you with JP Morgan for joining us today.
Thank
Futures
you.
up 24. Thank you, Amazon. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. With 4 days left until Election Day, Kamala Harris says former President Donald Trump saying he would protect women whether they like it or not shows he does not understand women's rights to make decisions about their own lives.
Whether he has said, as he has, that women should be punished for their choices, whether he has talked about his pride in taking away a fundamental right from women.
Meanwhile, Donald Trump called former Representative and Trump critic Liz Cheney very dumb.
She's a radical war hawk. Let's put her with a rifle standing there with 9 barrels shooting at her, okay? Let's see how she feels about it. You know, when the guns are trained on her face.
Trump spoke in Glendale, Arizona. Crews are searching for bodies in stranded cars and sodden buildings as residents salvage what they can from ruined homes following monstrous flash floods in Spain that claimed at least 158 lives. The death toll could rise more as search efforts continue. An unknown number remains missing. Secretary of State Anthony Blinken says the U.S. expects Russia to begin mobilizing North Korean troops in the coming days to fight Ukraine.
Should these troops engage in combat or combat support operations against Ukraine, they would become legitimate military targets.
Blinken says 8,000 North Korean troops are stationed in the Kursk region of Russia. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
I didn't know this. The Kansas City Chiefs are the only undefeated team?
Yes, sir.
Wow. Mahomie.
We now begin a debate of the weekend. We need to be delicate here.
Yeah.
Are they favorited by the referees, the umpires?
I don't know, Michael. What do you think?
Nah,
No
if
pressure,
you're the
Taylor's-
losing team, you're going to say, of course they are. But no, I think that for the most part, the refs get it right, except for some totally blatantly missed face mask calls in the Vikings game. But that's another story.
What about the reffing of Lions-Packers? I mean, that alone,
Well, that's going to be a good one too, man. It's like I got it, and that's a 1 o'clocker, man. I got to.
So
yeah, buddy.
We'll have to get up early, like 12 noon.
Yeah. Listen, Lions fans, we know we've had calls go way totally wrong. 2 words, Calvin Johnson, and the infamous catch. That's all I got to say. Yeah. But you know what? Hey, this season we're kicking butt.
They're killing it. I mean, it's great. Remember when the Lions lost like 14 games in a row?
Yeah.
Those days are over.
No, they're back.
It's like Columbia football. They've turned it around.
Sure.
Futures up 25, up 0.4%. Odd lift to the market. NASDAQ up 0.5%. Amazon leading the way. Is that like
I
the
thought
basic?
it was, solid results. They're selling stuff. The cloud's working. Shareholders like what they heard last night.
You need to stay with us on YouTube. Of course, subscribe to Bloomberg Podcasts on your commute across this nation. We have a really important political conversation coming up. Can't say enough about it. Jessica Taylor informed at the Cook Political Report. Charlie Cook, his last essay, he is on fire. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures advancing as we await key payrolls data for October, 8:30 Wall Street time now. U.S. jobs data report could show a temporary hit from hurricane strikes, with payrolls seen rising by just 100,000 and unemployment holding steady at 4.1%. Now, Bloomberg Economics expects the first negative jobs print since 2020. We shall see. Right now, we have NASDAQ futures up 0.4%. Same for Dow futures, S&P futures up 0.3%. The two-year yield, 4.19%. That's up 2 basis points. The yield on the 10-year, 4.29%. And that is little change. Few stocks on the move. Amazon up 7%, reported strong results in cloud and e-commerce. Then you have Intel up 5%. Sparks some optimism over its turnaround after its revenue outlook slightly beat. Nvidia shares following Intel higher, they're up more than 1.5%. Now, meanwhile, Apple, their shares falling, down more than 1.5%. Softer sales forecasts kind of added to those lingering concerns about the China market. And the numbers are in. The Dodgers-Yankees World Series delivered Fox Sports its biggest ratings victory since 2017. An average 15.8 million people watched each night, climbing to 18.6 million during Game 5. That is your Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thanks so much. I mean, do the streamers step in now? They see those numbers. They got to play.
Oh, eventually, yeah, because of the cord cutting. We saw that from Comcast results yesterday, continued cord cutting.
What do you think about this idea we're done? Cable, go. Who do they sell it to?
Well, I have no idea. Paramount's, I mean, Comcast thinking about spinning out their cable. I don't know who buys it, because maybe private equity. That's the only call I have.
I want to get to this in a moment. There's a guy, Charles Cook, who is definitive in measured English about elections. He steps away from the emotion. He does show, not tell. He has a group of people around him in his eminence. We'll talk about Charlie Cook's latest essay. And one of them out of Furman is Jessica Taylor. She is exquisite on Senate dynamics, and she publishes this morning. Jessica, thank you so much for joining us. Love the Cook Political Report, telling people just shut up and subscribe. At the bottom of your note, you've got a bar chart of money made, money earned, money coming in versus vote. What's the correlation of money coming in? Nebraska, Osborne and Fisher. What's the correlation of money coming in to electoral outcome?
Well, I think that when you have a state like Nebraska that's very Republican and you have Dan Osborne, who's an independent, trying to stress that he's not a Democrat, even though a lot of the outside money coming in to help him is from outside Democratic groups, he's been able to control the airwaves and set the narrative. We even see his latest ads running against Deb Fisher there in a state that Trump won by 20 points,
Right.
making an overt appeal to Trump voters. He's the most unique candidate of this cycle in the Nebraska. I did not expect on November 1st to be talking about Nebraska at all. He's underscoring his blue collar roots. He says that actually for him, the $174,000 salary of a senator would be a pay raise. So I think that's breaking through with a lot of people when we look at where the economy and everything is. So no one would know who he is if he was not able to get this money and to get his name out there.
With your Senate focus, I want to get you into the Amy Walter timeout chair. With your Senate focus, can you frame out probability of a Republican Trump sweep?
I mean, I think that if there is going to be a trifecta, it will be a Republican one. And that's simply because the Senate is overwhelmingly favored to go to Republicans. My final Senate analysis is publishing maybe momentarily on our website.
I see it. It's out.
Oh, it is all up. Okay. We predict that Republicans will pick up 2 to 5 seats, which gives them a majority of anywhere between 51 and 54 seats. We came into this cycle with Democrats having to defend 23 seats to just 11 for Republicans. Republicans are going to pick up West Virginia. We know that. They're favored in Montana over Democratic Senator Sherrod Brown, and that gets them to 51. So it just means that, do they add Ohio, where the race is neck and neck? Sherrod Brown could defy the odds and win there, even in a state that Trump carried twice by 8 points. Those other blue wall states, Michigan, Wisconsin, and Pennsylvania all remain very close in toss-ups. So I just have a hard time seeing, Democrats need to flip Nebraska, but even though Osborne says he wouldn't caucus with Democrats, Texas is the one. So there's just far more paths for Republicans. And then I think that if we're seeing Republicans win in Wisconsin, Pennsylvania, and Michigan Senate races, that means that Trump has won those probably. So that means that he's won the presidency. And I think also, the House is very narrow. It's a true toss-up, but I think that probably as the presidency goes, as the House goes. So just because of the way the Senate math is, I have a hard time seeing Democrats winning the majority, and so that would preclude them from a trifecta, I think.
How about the House, Jessica? What races should we be looking at for the House of Representatives?
Yeah, so New York and California feature some of the top races. Those are not presidential battlegrounds, but Democrats suffered from lower turnout in the midterms. They're hoping that higher presidential turnout helps them. And there are some races that we've, moved toward Democrats in California. But some Republicans are still hanging on. They're sort of running ahead of where Trump is in those states. There's a couple of open seats in Michigan's 7th district, for instance, the open seat that Alyssa Slotkin is leaving to run for Senate. This morning to lean Republican. Tom Barrett has been raising a lot of money. Even though Democrats are spending heavily there, we see that race as slightly favoring him. And then, if you're looking for early seats on election night to see how they go, there's a couple in Virginia, Virginia's 2nd and Virginia's 7th district that are also very tight that could give us an early indication of how the House is going.
Charlie Cook has an absolutely brilliant essay here, folks, out in the last couple days on the lack of landslides like we used to have, a dearth of landslides. He goes into, item by item, the closeness of these races over the years. And as you know, Jessica, Charlie goes to the surprises. What's your biggest potential Senate surprise?
I think it's Texas.
Really, Cruz?
Yeah, Democrats have polling that shows this race tied. Other public polling does not. I still think those, Cruz had a very close race in 2018. He actually very much benefited from it being a midterm year where the Republican governor, Greg Abbott, had a far better turnout machine. I think that Cruz is very vulnerable on abortion. We saw Harris go there last week to sort of emphasize the state's very stringent abortion laws. In fact, while other states are able to have referendums to overturn them, Texas does not allow that. And, just this week, there was the story of a woman who was denied care after a miscarriage and she died. So I think those are very much in focus right now. And this is what if Democrats have a better night than expected, I think it probably has to do with, I'm cognizant of the fact that in 2022, the polling actually underestimated Democrats. And if Democrats have a better night overall, if Harris does, if someone like Colin Allred in Texas does, I think it's because the potency of abortion and the Dobbs issue after Roe fell is still is still very powerful and is driving a lot of voters, particularly female voters.
Jessica Taylor, thank you so much. A quick political report. Her focus on the U.S. Senate. Our focus will be election coverage Tuesday night at 5 p.m. Kayleigh Lines, Joe Matthew, Kayleigh Lines, with really interesting, deeper conversation than the normal drivel. At 7 p.m., they go stronger. John Farrell, Anne-Marie Horton with Joe Matthew and Kayleigh Lines. Our live election results, all of that. The context of it is key for Bloomberg. The conversation Tuesday night, Bloomberg Radio, television, and of course out on YouTube, all of our Bloomberg podcast efforts. 5 p.m., 7 p.m. election night. Bloomberg Surveillance this morning brought to you by IBKR. Financial advisors switched to Interactive Brokers for lowest cost global trading and turnkey. Custody solutions, no ticket charges, no conflicts of your interest at ibkr.com/RIA. Really interesting there. I still don't, I'm a foreigner.
Yep.
I don't understand the linkage of money to voting. Gura is fluid in that. Matthew gets a cold. I don't.
Well, one of my questions would be to these folks, if there's only literally a handful of undecided people in this country, why is each party spending a gajillion dollars on TV ads and things like that? I guess you're right. Turnout is probably the answer, but it just seems like it just, this is different. We didn't have this growing up, Tom. We didn't have this incredibly deeply split electorate where it really is 50-50 out there.
Let me do a data check. We look at equities. Excuse me, still fighting the plague. It's getting better every day. Let me do a data. 3, 2, 1. Let me do a data check. Equities, bonds, currencies, commodities, a lift to the market here. NASDAQ up 0.5%. S&P up 24 points right now. In the bond market, getting ready for Jobs Day, red and green on the screen, yields higher for the 2-year yield. It's Friday. Paul Sweeney announcing the weather is perfect. Friday songs. Good morning.
Monday's blue, Tuesday's gray, and Wednesday too. Thursday, I don't care about you. It's Friday, I'm in love. Monday, you can fall apart. Tuesday, Wednesday, break my heart. Oh, Thursday doesn't even start. It's Friday, I'm in love.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation is still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. It is Jobs Day, 29 minutes away from an important jobs report. Really hurricane infected. 2 hurricanes affecting today's report. Anna Wong of Bloomberg out with a brilliant essay. Her delta of statistical noise is 150,000. Keep that number in mind as we migrate to Claudia, Sahm, and Ellen Zenter over the next half hour. Got a really important thing here out on YouTube. We got to get to that in a moment. Bloomberg Surveillance this morning is brought to you by Cohn Resnick. Advisory Assurance Tax. Is your business future ready? Talk to Cohn Resnick's digital advisory team about strategies, about platforms to drive competitive advantage. Thank you, Cohn Resnick. Oh, Paul, I am so in the YouTube live chat. I forgot Iron City beer.
Yes, that's a good one. Forgot
Wow.
about that one.
Talk about surveillance timeouts
Yep.
here. 10 miles. Excuse me, 10 miles up the Allegheny River from Pittsburgh, from that great Pirates ballpark, Creighton, Pennsylvania.
Yeah,
They're
that's a
making
good
it in
one.
the old PP&G Pittsburgh Glass Company.
That's another good one.
And I love their mango. They got a mango beer that's,
Okay.
it's sort of like
die
it's what
for.
Lisa and I, it's Iron City Brew, Pittsburgh.
Yeah,
We say
that's a
good
good
morning.
one. Yep.
Gura will quaff that
I'm
there.
sure he will.
On his trip to Pennsylvania. Look for David Gura with important analysis of the swing states from Wisconsin to his Arizona. With the Interactive Broker Studios and Bloomberg Business Flash, Lisa Mateo.
And we've got green on the screen. The end of a pretty volatile week. Mixed earnings from big tech companies at the market on the defensive. Amazon, Intel shares higher on optimistic earnings results. We have Amazon up 7%, Intel up 5%. Apple shares, though, lower, down more than 1.5%, reporting softer demand in China. Right now, we have NASDAQ futures up 0.4%. Same for Dow futures and for S&P futures as well. We have the two-year yield, 4.18%. That's up 1 basis point. The yield on the 10-year, 4.28%, and that is little change. And a quick note, October, the worst month for treasuries in 2 years. Over to commodities. Yeah, oil gaining due to renewed tension in the Middle East. Right now we have Brent crude up more than 2% at $74 a barrel. WTI crude at $70 a barrel. And sticking with oil, Exxon, yes, up nearly 2%. Beat analyst estimates third quarter earnings. Higher oil production from the Permian Basin. Will that really help cushion that drop in crude prices? Exxon actually the best performing oil major this year. Chevron up more than 2%. It reported similar news like Exxon, but it also indicated potential U.S. job cuts, part of a $3 billion cost-cutting plan. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Appreciate it. The Economist has been on fire. They did an endorsement. I believe they endorsed the Vice President, and lots of good analysis over at The Economist. And part of that is EIU, the Economist Intelligence Unit. Joining us now, Constance Hunter, their chief economist. Constance, I was on the Vespa in Rome, and I was thinking of you in that, like Europe looking at this election. What do you and EIU perceive as the continental European view of what we're going to see November 5th?
Yeah, I mean, you bring up a great point, and thank you for thinking of me when you were in Rome. Europe is looking at this, I think, with some trepidation, right? I think not only are we thinking about how Trump's predisposition towards NATO might impact the situation in Ukraine and Russia, but of course, his tariff threats. And we've actually done some work on this. I can shoot it over to you guys regarding what a Trump presidency would do, not only to the U.S. economy, which would be to weaken it, but to weaken the rest of the world economy.
Yeah, but what would a Harris presidency do?
Well, Harris presidency would be probably more of the same. So and we think of the same. We got GDP this week, which showed we have remarkable productivity growth, right? We had GDP growth of 2.1%. And let's say you look at core PCE at 2.2. So what that tells you is that we are having non-inflationary growth as a result of a productivity boom. And part of what's underpinning that productivity boom is all of the investment from the Inflation Reduction Act, the CHIPS Act, and the Infrastructure Act, which was bipartisan. And these have set up public-private partnerships so that private industry can invest and allocate capital in a sound way, but with some backstop and assistance from the government. So we are getting this amazing productivity boom that, quite honestly, no other economy in the world has achieved.
So, Constance, we're going to get some jobs numbers today at the labor market. We know it's going to be a little bit squirrely there with the hurricanes and the strikes and all. But how do you feel about the labor market here in the U.S. these days?
Yeah, I mean, look, It's I think it's still healthy. We're looking at what 4.1, even if we're looking at 4.4% unemployment rate, right? That is still a mostly fully employed economy, which, by the way, is another thing that is contributing to the productivity burst. What I think you need to look at in today's payroll report is the diffusion index, right? Because even though we have these concentrated strikes, which if I read correctly on the Bloomberg this morning, it looks like they're inching towards a resolution, which is great. But we have these temporary effects from the strikes, the hurricanes, some seasonal factors in October that are still sort of dogging us post-pandemic. And so if you look at the diffusion index and kind of say, well, broadly, what do firms across the country, not in the location of the hurricanes and not at Boeing and not other striking companies, how are they looking at the jobs market? If you continue to see the diffusion index over 50, then that is a good sign that we still have broad-based jobs growth, even though this number is likely to be weak.
Paul, I'm looking at Allegheny County, Pennsylvania, with an unemployment rate of 3.0% September of this year. And that's basically back to the nirvana of 1999. And it's beneath 2019. It's a better, more constructive job market in Pittsburgh up to Creighton, Pennsylvania, and Iron City beer than it was in 2019.
Exactly, Iron City beer. Constance, talk to us about the U.S. consumer here. I mean, again, if the U.S. consumer has a job, wages are rising, probably in excess of inflation. What's your view of the U.S. consumer these days?
Yeah, I mean, I think we're looking for steady consumption next year, around 2.5%. And we had a little surge in goods consumption this past quarter, and I'm not sure how much that continues. It was a bit unexpected. But if you look at services consumption, it's growing just above 2.3, 2.4%. And so if we have a consumer growing at 2.5% next year, then you can easily see growth within 30 basis points either side of 2.5% for 2025. And again, what is underpinning that is productivity, and productivity is what allows us to pay higher non-inflationary wages, right? Because when workers are adding productivity and they get job raises because they're adding productivity, that is non-inflationary throughout the economy. It also raises living standards, which is really important.
And Constance, every time we get the chance to speak to a smart economist like yourself, I have to ask the question because I really don't know. Tariffs, are they good? Are they bad? Are they a tax on the consumer? How should we think about tariffs?
A few things. If you raise tariffs, so let's say we import 100 widgets and we raise tariffs on those 100 widgets, one of two things in a combination is going to happen, right? You're either paying 20% more, and then that's inflationary, but we know that demand is a function of price. So we're not going to get all of, if we succeed in reducing our demand from foreign companies or from foreign countries, we are not going to receive all of the tax benefit, right? Because we're not going to be purchasing as many of those things. So not only do they increase prices for imported goods, but because the prices increase, we don't actually receive the tariff income that is forecast. A second thing happens. Domestic companies then see that they could raise their prices a bit because imports are more expensive. So you push out this inflationary impetus around the entire economy that is not based on demand pull inflation, right? It is a policy error that forces inflation higher, and that is not good for the economy.
Constance Hunter, thank you so much for the EIU. Greatly appreciate it this morning. Futures up 23 here, 20 minutes to the jobs report. The VIX, as Paul mentioned, extending out from 20 to 22.25. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Former President Donald Trump sat down with Tucker Carlson at a campaign event in Glendale, Arizona. Former Congresswoman and Liz Cheney is her father, also Vice President Dick Cheney, are supporting Kamala Harris. Trump had words for that.
I don't blame him for sticking with his daughter, but his daughter is a very dumb individual, very dumb.
Trump also called Liz Cheney a war hawk. Meanwhile, Kamala Harris reacted to Trump's comment that he would protect women whether they like it or not.
It actually is, I think, very offensive to women in terms of not understanding their agency, their authority, their right, and their ability to make decisions about their own lives.
Today, the vice president holds 3 events in Wisconsin, while Donald Trump will rally in Michigan and Wisconsin today. Since the 2020 election, the Cybersecurity Infrastructure Security Agency has been doing everything possible to reassure voters and correct any disinformation about the integrity of the American vote. Accusations of tampering and ballot dumping have made polling workers feel unsafe. CISA Director Gene Easterly says seeing election workers subjected to threats, harassment, and in some cases forced to work behind bulletproof glass is very discouraging to her.
They're not faceless bureaucrats. They're our friends. They're our neighbors. We see them in the community every single day, and they're not doing it for pay or for glory. They're doing it because they believe in our democracy, and they deserve respect.
Meanwhile, police in Portland, Oregon and Vancouver, Washington are still looking for the suspect who set fires to voting drop boxes. Russia's top diplomat is hosting his North Korean counterpart for talks amid reports that Pyongyang has sent thousands of troops to Russia to support its military in the war in Ukraine. Today's meeting comes on the heels of the Pentagon statement that North Korea has deployed thousands of troops to Russia to fight against Ukraine within the next several weeks. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
I'm Michael Barr. Thanks so much. For our international audience, we've got to do this because in America, it matters. Let's start with Penn State, Ohio State. I mean, it's the big game of the weekend. What do you guys think, Paul?
Happy Valley, 12 noon. I grew up a big Penn State fan. My son graduated from there. This is the test. Every year they have to beat Ohio State and/or Michigan.
Just Madden isn't even cogent. A&M's up to number 10.
I know, they're great.
They vaulted from number 25 to number 10.
Exactly. College football. This is a really big weekend for a lot of teams because this gets serious now in conference.
Can I talk about the bias, which I have and Lisa Mateo has, which is you see Georgia, Ohio State, Tennessee, names we know, Iowa State even in the old Big 8, Alabama 6-2. What's that?
Yep.
Is Oregon real football? They're out on the West Coast. It's not the same out there.
Ooh.
But they're now in the Big Ten, just for what it's worth, for whatever that's worth.
Yeah.
But I've seen them a bunch this year. They look really good.
Yeah,
I mean, really good. So I don't have a problem them being number one here. But let's see what happens when they start playing some of these.
Duke plays a real football team this weekend.
Yeah, God, who do we have this weekend?
Hey, where's Sassar? Can we get Eric? Can you see if Damien's in the building? I mean, it's like a 1 in 20 chance. He's home.
Duke is a respectable 6-2. David from 731 Lex writes in, Duke is a respectable 6-2. Mr. Gura speaking up.
He knows how to spell Duke?
Yes, he does. He got lost a few times from Chapel Hill and found his way to Durham. So
that's okay.
Yeah.
He's doing so much sweepstakes. He's got the Sikorsky this weekend to get across Pennsylvania. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
For the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures rise ahead of today's key U.S. jobs data. That's out in about 15 minutes from now. Today's payroll report, it could show job growth weakening. Inflation measure favored by the Fed yesterday posted its biggest monthly gain since April. Policymakers, they meet next week. We'll also get ISM manufacturing later this morning. NASDAQ futures up 0.4%. We have Dow futures up 0.3%. S&P futures up 0.4%. We have the 2-year yield at 4.19%. That's up 2 basis points. A yield on the 10-year 4.30%, and that's up 1 basis point. To currencies, the dollar stronger. The Japanese yen weakened after climbing as much as 1% against the dollar yesterday. Right now at 152.75 against the dollar. We have the euro weaker, British pound stronger. We have Bitcoin up about 0.2% at around 70,000. Shares of Boeing, they're up 2%. The company and union leaders, they reached a tentative agreement. Members will vote on that new offer on Monday. Shares of Abbott Laboratories, Reckitt, they're on the rise. Abbott up 5%, Reckitt up 8% in London, their first victory in that baby formula trial. Enter earnings. We'll end off there. Shares of Boston-based Wayfair seeing a nice lift, up about 15% after earnings beat expectations. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Greatly appreciated. Out on YouTube live chat, it's good to have everybody on live chat because they keep track of Damien.
Okay, where is he
Let's
today?
see, Friday, it's 80 degrees. Okay, they just saw him at the 4th tee at Tamarack.
Oh, it's a great
You know,
course.
you go out the 1 and the 2 is an ugly par 5. Damien's never done 5 on that hole, and then you got the little, the cutesy pie par 3 across the water.
Yep.
And the fourth is it's like where the round starts.
I've lost a lot of golf balls at that golf course.
Yeah, we say good morning to Damien Sassower, probably now up on the 5th, coming back to that par 3-6 hole as well. 12 minutes from the jobs report. We need to be informed. Joining us right now, Christina Capmany, Senior Portfolio Manager in Invesco. Okay, there's lots of noise. How do you use the jobs report here in 12 minutes if we got 2 hurricanes wrapped around it?
We have hurricanes, we have strikes, there's a lot of noise, and we've continued to have these just bifurcation. You look at the estimates on Bloomberg, I think the highs are at 180 and the lows are Bloomberg Intelligence at -10. Like, these are huge ranges, and I think you have to take a step back and say, what is the trend? Where are we going? What's the general direction? Last month's number was very strong, in 254. ADP this week was a very strong number. My bias would be a weaker number gets a bigger market reaction, but I think you're supposed to look at the trends here.
Your keel at Invesco has to be a 2.8% GDP. I mean, America, at the minimum, it's a solid economy.
Absolutely.
Is that right?
Absolutely. I think the economy is solid, and some of this market dialogue about the Fed went 50 in September and then we flip-flopped to should the Fed be pausing, I think that is misguided. I think the Fed is easing and adjusting from a restrictive level because the economy is in good footing and it is realizing the soft landing and they want to keep it.
So, Christina, as a global portfolio manager in the fixed income space, where do you guys see the best opportunity these days?
Look, there's a lot of uncertainty everywhere. Certainly the election, all of this noise we talked about in the labor market. And I think with the elections, because of tariffs, that adds an extra layer of uncertainty to global. China, you have a lot of uncertainty about the stimulus that's going through the economy and how meaningful will it be, how impactful will it be. So the things that we have clarity on now is the level of vol in all of these markets, the MOVE index for rates, the VIX for equities, FX vol. We expect all of that to come lower. I think there is some comfort in the U.S. at the moment because we are still seeing this U.S. exceptionalism story. So front-end rates have repriced meaningfully. I think there's a lot of value in Choose, front-end credit, both.
See the 2-year, Tom.
It's
my favorite.
Both IG and some of this the strongest high yield, so double Bs, we think that there's value in. And then it's about where can we see through kind of some of the noise post-election and if we get some settling in international markets.
So, I mean, how much credit risk are you willing to take these days? Because, as you mentioned, the 2-year, which is my fave, 4.2%. I got no fuss, no muss. Why should I take credit risk? How do you guys think about that?
Look, so I think that certainly in the U.S., and I think that this carries on to some European credit as well, the fundamentals of these companies are good, and in shorter duration paper, you are getting spread plus the reliability of the companies, and you have underlying growth. And we don't have a lot of worries about the growth and the trajectory of the U.S. economy, so that should support these companies. So I think that although spreads are tight, there is still some value there.
Commercial free for you into the jobs report right now.
Nice.
Ellen Zenter and Claudia Sahm coming up. We're with Christina Campmany here of Invesco. We thank all of our sponsors, particularly Cohn Resnick, Interactive Brokers, and Commonwealth for giving us a space here to give you the jobs report in 8 minutes.
So, Christina, what do you think this Federal Reserve should do here? We're going to hear from them next Thursday. What do you think they should do in November and maybe December and going forward?
Look, I think the path is still, there's clarity for into year end. I think the base case is a 25 basis point ease both in November and in December. That gets them 100 basis points under their belt.
Yep.
Hopefully by the end of December, we have clarity on the election outcomes in the U.S. and maybe some more clarity on what fiscal policy looks like. And then we adjust. I think Powell has made it clear time and again, they have to react to data that they have on hand and actual policies, not just what we think policies may come.
Yep.
So this discussion about pause, when you have 100 to 150 basis points of ease, I think that can be on the table. I think it's premature now. But I think really in January, once you have more of this clarity, then we can, and the market has done a tremendous amount of work since the September ease to bring up that terminal rate in the market and say, we don't have to cut to or through neutral. We can kind of adjust and wait and see.
I mean, everybody's focused on the equity markets and Apple, Bag 7, blah, blah, blah. I'm focused on the debt market, which is at an extraordinary 12 to 18 months. Does that continue, say, into 2026? Or do you see, as a general statement, price up, yield down, clip the coupon, or even garner a total return?
Look, I think in the front end, there's value. I think especially with this whole argument, if we do in fact hold on to the soft landing, which is our base case, and you have a easing to 4.5 by the Fed to then wait and see, the curve needs to be steeper. 10-year yields need to be higher, 30-year yields need to be higher. And then again, you have, what does the market do about what kind of fiscal policy we get? But I think those are, so then the follow-on in credit as well, longer dated paper. I think that's where you can have more hair.
Are you surprised that the 2-year Treasury is at 4.20 when the Fed's cutting rates?
I think, again, there's narratives in the market that's been a Trump trade, this reprice. I think a lot of it has been a reaction to the strength of the data and last month's labor market data. I think we pushed too extreme from one to the other. But I think at 4.25, if you expect the Fed to kind of ease at least 100 to 150 basis points, those are, they look interesting levels to own front-end paper here.
Christina, thank you so much.
Great.
Christina Campmany with us with Invesco this morning. We now turn to Claudia Sahm, without question my economist of the year for 2025. Her impact, her informed debate off the Sahm rule, of course, all of it, really focused on Jackson Hole. And she had a dinner at Jackson Hole, folks. I couldn't go to it because the Gulfstream was leaving Dodge. But Claudia Sahm with huge influence here in 2024. What a joy, Claudia, to have a jobs market report, which is a mess. So let's move right on right now. The call of the year, which you nailed, is recession, maybe not. I mean, with a 2.8% GDP, how far out there is the so-called NBER recession?
We are not in a recession, not even close. I mean, we're exactly the opposite of it. We're in a real expansion. That's good. So, but there's a lot of reasons for this. There are reasons why this economy has been very confusing and complicated the last 4.5 years. Finally, we caught a break that was a good outcome.
Okay, I want you to go Simon Johnson on me. And a bit, the laureate and what Darren's doing and, the polarity of Americans' power in progress. We've got a solid economy. What portion of America is enjoying a solid economy?
A large portion. The reality is, though, we should take the win and keep on pushing. right? There can always be better. We have always had people left behind. We have always had more that we could accomplish just on like productivity space or technology. So complacency is not a good thing. It's not an American characteristic to be complacent, and it seems being a little grumpy is one of ours. And that's fine as long as we continue to keep pushing in the right direction. And I think by and large that's what we've seen. It's been a rough ride, but we have made a lot of progress. And frankly, the US economy in many ways is the envy of the world right now. And we ought to keep building on that. The world needs us to keep building on that too.
So, Claudia, given that background and given the labor number today and how messy it might be, but the trends seem to be pretty solid here, how do you think the Fed's going to react next Thursday and then go into the December meeting and into next year?
Today's mess is the kind of mess the Fed knows how to deal with. We have hurricanes, sadly. This is something we've seen before. We have had strikes before. We've seen this. We see how it plays out in 1 month and how it reverses often in the next month. So this is a playbook of messiness that the Fed is comfortable with. It should not change their outlook for tomorrow. And the other thing is they know how to read between the lines. We will learn something today about the labor market. It's just the headlines could be very confusing. And the Fed knows how to read beyond the headlines.
If the distribution of agony, Claudia Sahm, in America's changed, when we were studying this, it was like, oh, North Carolina textiles, they're in recession. New York State, New York City's not. Forget about that. Now it's MSAs, and the halves within an MSAs are booming, and everybody else is flat on their back. Witness the election. Is it harder now to judge the polarity of America than it was 20, 30 years ago?
So having spent a lot of time in the last year or so thinking about what is this disconnect between what we see in the data, which largely looks pretty good, and what we see coming out of people's mouths, which is largely not good, I think there's a residual effect of what we have gone through with the pandemic the last 4.5 years. I had a couple tell me, you're right, we look better on paper than we did 4 years ago, but we don't feel like it. And we're worried that tomorrow we might not be. So I think we've come out of a period that's very confusing. There have been lots of twists and turns. Most of them have not been for the good. So I can understand why people are not comfortable in, even if they've made progress, in really embracing it. So I think coming out of the pandemic, we do have some scars emotionally, even if we don't want to admit it. And I think also legitimate uncertainties about what comes next. So I think that's an extra factor that's weighing on the country and the sentiment this year.
Claudia Sahm with us. She will continue with us with New Century Advisors here. We're going to get the jobs report in 1 minute's time. We'll go beneath the headline data, but again, an odd report. It's interesting is you're the confidence of Dr. Sahm there, Paul.
Yep.
But it's not one, it's two hurricanes.
Sure.
And Valencia, Spain, it's the absolute horror of the amount of water. Yeah. It's not like, Ida or whatever in Florida 10 years ago.
No, it's not. Claudia, given that backdrop and given the backdrop we'll see on the labor market, just give us a sense of, just how the consumer is.
I think the consumer's in a good place, but they're concerned. And absolutely, there are always consumers being left behind, and the ones at the bottom have been really squeezed some by the higher prices, but they are benefiting from a labor market that keeps going.
Well, the labor market keeps going, and we'll see that here again. Constant Hunter framing out 4.4% unemployment rate actually being still a solid economy. We're benefited by Claudia Sahm of New Century Advisors. Ellen Zenter of Morgan Stanley will join later. And Tiffany Wilding of PIMCO will be with us in the 9 o'clock hour as well. As we go into the report, futures up 22. The 2-year yield lifts this morning.
This is breaking news from Bloomberg.
And the numbers are coming in. The change in non-farm payrolls. This is for October. Okay, so the survey was for 100K. It comes in at 12K, so a big difference there. The prior was for 254,000. Now that was revised to 223,000. So a big difference we see here. We go to the unemployment rate right now. That was a survey for 4.1%. Came in right on target at 4.1%. And we'll also look at average hourly earnings month over month. It was for 0.3%. Came in at 0.4%. The prior was for 0.4%. The difference in the market. So we have NASDAQ futures up about 0.3%, Dow futures up 0.2%. We have S&P futures up 0.3%. Tom.
Lisa, thanks so much. I've got to go just to the ratios, and I look at the unemployment rate, 4.1%. the quiescence there. The revisions are a little more less enthusiastic than maybe what we saw 29 days ago. I'm just looking at, there's 896 statistics here. Manufacturing payrolls, negative 6,000 on the revision. Futures up 23 now, up 20. There's a little bit of a pullback in the equity markets. The VIX 22.08. Paul Sweeney always going to the 2-year yield. Paul, it comes in with a vengeance here, 4.12%.
Yeah, 4.12%. So again, the revisions, Tom, just from last month, change in non-farm payrolls, we were at 254, now revised down to 223. So a little bit weaker. But again, the headline today, 12,000 change in non-farm payrolls, consensus was 100,000. But again, the economists have been warning us that, we had the hurricanes, we've got some various strikes, and that's going to make this number, a little bit tough to decipher.
Yeah, and again, the net revision is a negative 112. So it's easy math. I take 12,000 positive, minus 112 is a negative 100,000. Claudia Sahm is going, why am I dealing with these financial media tools? She joins us right now. I mean, the value here, Claudia, is going to be, am I correct, massive revisions, 30, 60, even 90 days out?
Well, not even necessarily revisions. We could just see next month's number be a big, strong positive. Right, kind of unwinded. We had 2 major hurricanes and we had a strike happening in the period that we're trying to measure jobs. There probably really was a hit to the jobs. Now, I will say I feel pretty vindicated. My Substack piece this week, that was the preview for this, was talking about this could be our negative payroll print. And it's not negative, so I was wrong on that one, but this was a low print. And the argument there is, even if the reality is we're kind of moving along at trend growth, which is a little under 200,000, like that was the pace before the pandemic. Well, you get 100,000 knocked off because of hurricanes and the strike, which was Governor Chris Waller's estimate of what that effect would be. And then you take into account that these are survey estimates. They are imprecise. The BLS tells us that always the confidence interval around an estimate is over 100,000 jobs. I mean, so we really, that number, that 12,000 we got today, that could be entirely consistent with a labor market that's growing at trend. And frankly, the unemployment rate staying low, that really goes in that court.
Let me get out.
This was more disruptions.
Yeah. Let me get out front. It's November 1, so it's not tacky. If I was saying she was our economist of the year in September, that would be tacky. But come on, November 1, Neil Dutta last year killed it with his optimism on 3% GDP. Claudia Sahm killed it this year, charging the debate here on our labor economy. She's a New Century advisor. Claudia Sahm, see you next month. Joining us right now in studio, Ellen Zenter. She runs an Apple iPhone like no one. Do you need an iPhone 16 to go through the data faster now than you're normally going through?
This is my work phone. I am a Android Samsunger.
Really?
Yeah,
Wow.
I'm that age, guys. Yeah. I'm forced to use an iPhone, and I only know how to check email.
Slow motion. Lisa Shallett has the iPhone 16 Pro. Ellen Zentner with us now, of course, with Morgan Stanley's Global Investment Office. You link consumption into labor like nobody I know. We had a buoyant consumption number. Are we taking it all from savings, and is it a fake labor economy?
No, not at all. I mean, look, new data that we got some weeks ago showed that it turns out we've spent a lot more than we thought, and savings was still higher because income numbers have just been revised up that much. So we still got income that's really robust. And I agree with Claudia that there is still a lot of disruption in these numbers, and this probably is consistent with a labor market growing at trend. And so we're still producing enough income to support consumption. I mean, look at consumption of lower income consumers. They are really going to love these lower gas prices. Mm-hmm. That frees up a lot of buying power as well.
You think so still?
Yeah. Yeah. And wage growth is still healthy while inflation's coming down. So you got real wages that are positive, you got gas prices that are lower, and so you're getting some support coming back for lower income households as well.
So you mentioned the average hourly earnings on a year-over-year basis, 4%. That's pretty solid, right? I mean, give us a sense of historically where that number typically comes in.
Well, that number, so look, average hourly earnings in this report, it's a tiny sample. And it can be distorted from month to month depending on what hours worked do. So it's a calculation thing. And so 4% average hourly earnings on a year-over-year basis, you would say, gosh, that's a little bit higher than what would be consistent with the Fed's 2% goal. But you look at the employment cost index, which came out this week.
Okay.
That was Yellen's favorite measure. It continues to be the Fed's favorite measure.
I just looked at it moments ago.
That's a
while you
much
were
more
talking, Paul.
comprehensive measure of wages and labor costs, and that is absolutely right now consistent with the Fed's 2% goal, which means that yes, it is healthy. So you're right, it's healthy, but it's not too healthy.
Isn't it amazing? She's
it's not
talking
too
about
fast.
it. I'm bringing it up while you're talking.
I know.
ECI from 5%, 5% into 3.9% year over year, nowhere near back to 2.75% sort of pre-pandemic as well. You know, we should talk to her about hourly earnings and the effect of the Yankees defense.
Oh boy.
I mean, it could
I
be
don't want
there.
to talk about the Yankees. I can't. I turned it off at the 8th inning on Monday. I turned it off in that last game. I was disgusted.
I was like, she was like third row with Dan Ives. Our economic indicators, all of our analysis here with Claudia, Sahm, and Ellen Zenter, always brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to Commonwealth.com to learn how. We say thank you to Commonwealth, foundational support of all we do here in economics. Futures advance up 28.
Ellen, what do you think this Federal Reserve should do with data like this here to any other data we've seen over the last several weeks as they get together next week?
Cut. Yeah.
How much?
Yeah, 25.
Okay.
Yeah, the economy's fine. And every time we get great data, the market wants to pressure it and say, well, the Fed doesn't need to do more here. But what is Chair Powell going to stress next week? Yeah, the economy's fine. The economy's great, so let's keep it there. Let's keep it there. And look, we've got ample room to cut. We don't know where neutral is, so we're going to baby step it there. I mean, they're in a great position having started the cutting cycle before the election, so they're in a great position if there's something that impacts the outlook for the economy. You can speed up rate cuts easily. You can pull rate cuts forward. I'm more in the camp of the risk of more than less from the Fed.
We are so thrilled, folks, of this Jobs Day coverage. You have Claudia Sahm with us, Constance Hunter before with EIU, and to have Dr. Sahm with us, and then Ellen Zentner, Liz Ann Sonders is on deck looking at the equity market response, particularly out beyond the election. And then Ira Jersey will show up with us. We don't care at all what Ira thinks. All we want to do is talk about Aston Villa.
Right, exactly.
I thought it was all you wanted to do is have a man on the show because it's an all-woman. This is the all-woman morning.
You know, I don't think there's any. You know, we didn't do that.
Diversity,
it's not like
Tom.
some gender thing.
It's
DEI
about
and all
diversity.
that, but
Exactly.
you know. We it just worked out that way.
Yeah.
That's how I would say.
It just so happens all the women are the experts. It just worked out that way.
Exactly. On the economics.
It's tough as nails.
I know. Ellen, how about the consumer here? I mean, the consumer's employed, the consumer's getting wage gains, inflation's coming down. How do you feel about the U.S. consumer these days?
I think the U.S. consumer is it's I would say great, except that we still have a lot of our eggs in one basket. The wealthy consumer is still driving the majority of spending, but like I said, I'm encouraged at some of the developments for lower income groups that we're continuing to create jobs. Wages are growing. Inflation coming down.
This is important. We're going to stop here.
Gas prices
this is
are
really
coming down.
important, folks. We're going to take the Morgan Stanley continuum here right now. Let's take it into deciles, 10th of economy. The pandemic stereotype is the rich did well, no surprise there. And the lower 1 and 2 deciles were benefited because they were taking care of the rich. What does that decile construction look like into Q1 2025?
So, well, the hope is that the spending is diffused more across those deciles. So, before COVID, the top quintiles, so the top 2 deciles, represented about 40% of consumer spending. That bumped up to 45% of consumer spending, and it stayed there.
It's still there.
It's still there. The top 2 quintiles are more than 60% of consumer spending. And so what you want to see is we start to have some share come back to lower income households because they're contributing more broadly to consumer
But you
spending.
haven't seen this yet.
Haven't
Into
seen
the
it yet.
election, we
Haven't seen it
yet.
yet. Right. And that's important, right? Into the election, yes, we haven't seen it.
Can
And
you
that's,
interpolate those decile analysis to say that the haves have a GDP of 4, 5, 6% real GDP, and the have-nots are near recession?
Well, the have-nots have been in recession for a couple of years. I would say that they're emerging from that. What delayed them moving into recession was that incredible savings cushion that they received when we put in all the stimulus during COVID. Once they spent through that savings, but still were dealing with extraordinarily high rent inflation, food inflation, energy prices, inflation, that, and wage growth that was not outpacing inflation. That's when they were in recession. And you could follow companies that cater to them and the troubles that they were having. You could see it in the products consumers were buying. It was all being supported by the wealthy. We don't want to have our eggs in one basket, right? We want consumer spending to diffuse more broadly across households. We want all households to participate in the expansion. And so we do have some positive developments here. Wages are growing on an inflation-adjusted basis. The gas prices, all of that, right? They've still got very high cost of living, just in terms of housing costs.
Right.
As the Fed cuts rates, the market prices in the whole path of Fed cuts immediately when the Fed even hints at doing something. What doesn't move yet until they actually cut rates are the rates, say, that you pay on your credit card debt. And it is younger and lower income households that revolve a lot of that credit card debt. And so as the Fed continues to cut rates, that's going to take some pressure off of them as well.
We're talking Pennsylvania swing state. Gura's out there trying every beer today. Have you ever brown trout fished in Pennsylvania? Like real, it's like 19th century trout fishing. Have you ever done that?
Yeah. That's where we go for small stream fishing.
Small stream fishing.
6.5 foot rod is perfect. A flick of the wrist. It's very easy. Small streams. The brown trouts are fierce. They're fierce.
Oh, really?
Yeah.
And compared to the sturgeon you're going after out west.
Yeah.
Compared to Patagonia.
These little guides, 10-inch, 12-inch little brown trout.
They're fierce.
They're fierce.
Really?
Fierce fighters.
Do you catch and release, or like we cooking at the fire?
All catch and release.
You're not cooking.
Catch and release.
You're not cooking up 3 of them. Surf. Liz Ann Sonders would be she'd have the grill going.
Yeah.
Out there doing it.
Hey, maybe a brook trout here and
Where's
there.
your secret stream in Pennsylvania? Don't give this the name, but which beer is it?
This makes no sense, Tom. You said the word secret. What's your secret stream? And it's no longer a secret anymore.
See?
Ellen Zenter, thank you so much at Jobs Day. Let's move on to someone constructive, okay? Ellen Zenter with Morgan Stanley. This is great. Claudia, Sahm, Ellen Zenter here with your job market. And equities improve, a perfect segue into Liz Ann Sonders. Wouldn't know a brown trout if it hit her over the head. Liz Ann, I look at futures up 30. I look at the Mag 7 hysteria. Liz Ann, I'm begging, get us into Q1 2025. What is our commitment to equities?
Well, I do worry a little bit about some froth in the market, although you've had some weakness that might ease a little bit of that, even outside of traditional investor sentiment measures. The consumer confidence report that came out, which was better in terms of headline confidence, also had a record high percentage of respondents saying they thought stock prices would be higher. So you see it in other behavioral data. So as I think between now and the first part of 2025, especially now with 25 estimates coming down for earnings, my biggest concern is just that backdrop of a little bit of frothy sentiment. All else equal, I think that means if you get any kind of negative catalyst, I don't know that today's weaker jobs report would be that because of what it infers for Fed policy. That to me is the background risk heading into 2025.
To my essay of the year 2 years ago, which was a brilliant effort by Lawrence McDonald on the wall of money that was out there in 2022. Liz Ann Sonders, is there a wall of money still out there trying to find a warm place?
Well, a lot of people point to the $6 trillion plus in money market funds as some wall that could come into the equity market. I'm not sure I agree with that assessment. I think that a lot of that money is pretty sticky. A lot of that money came in because of higher yields and out of riskier areas, whether it's on the fixed income side of things or in the equity side of things. And actually, if you look historically at the early part of cutting cycles, money actually continues to flow into money market funds, not in the opposite direction. So I don't view that as some imminent wall of money that could find its way into equities. I think that's probably a good chunk of that is pretty sticky.
Lizanne, what are you seeing from earnings so far this quarter? We started off strong with the big banks. We've had a bunch of tech earnings. What are you seeing, and what do you think the market needs to see from earnings?
Well, this is obviously a big week with 5 of the Magnificent Seven reporting. And in terms of Meta and Microsoft, at least, a quick glance, they didn't look bad. But at the expense side of things, I think it's the monetization story that really kicked in the second quarter. I think it's continued in the third quarter reporting season, which is the vast amount of expenses associated with AI, not just among the direct or indirect AI players, but across the spectrum of industries and sectors, and maybe the time gap between those investments and the monetization thereof, either from a revenue perspective or a productivity perspective. So I think we're continuing that theme, and it helps to explain some of the weakness like yesterday in tech.
We're going to go CFA Inside Baseball right now. Lizanne, I am apoplectic over the simplistic income statement analysis of the financial media. You got to pull in profit, distribution of profit, use of cash is the buzzword, and even into improved balance sheet dynamics. Are we slaves to a simple income statement analysis, or do you see more out there when you look at free cash flow growth, and what it means to a dominant balance sheet?
I do see more of that out there, especially as you move away from the dominant cap-weighted indexes like the S&P and the NASDAQ, and you go into some of the smaller cap indexes within, say, the Russell 2000. I think that's where you do see that factor differentiation that is more acute, whether it's high interest coverage versus low interest coverage, or zombie companies versus non-zombie companies, profitability type factors, to your point, Tom, high return on equity, strong free cash flow. And as you know, because we've talked about it a ton on this program, is I think that factor orientation, maybe not instead of a sector orientation, but as an overlay to that sector orientation, I think has been crucial, and I think will continue to be crucial. There's much more consistency in performance at the factor level than there is at the sector level.
What you just heard there, folks, is gospel. Lizanne Sonders, what are the factor constructive tone of Mag 7? Which factors benefit Mag 7?
Well, they are, the most part, very strong cash generation companies, and not just the Mag 7, but the mega cap tech related kind of names. They really took advantage of the rate backdrop that preceded the hiking cycle. And in most cases, many of these mega cap companies are earning more interest on their cash and they're paying interest on their debt. They're not at the mercy of where we sit in this cycle. The one thing I want to say, though, about the Mag 7 is the moniker was created when those were the 7 largest stocks in the S&P 500. Last year, they were not the 7 best performing stocks, but they were all very strong performers. That's not the case this year. They're not even the 7 largest stocks anymore. Tesla's not even in the top 10 anymore. You have to go down to ranking number 353 within the S&P 500 to capture all 7 of those names. If you look at the top 10 best performers in the S&P, only one of them is in the Magnificent 7, and it's not even the best performer. The best performer is a utility. So I think we have to change our mindset. We get wrapped into these monikers and these groupings, even if they fail to represent what they did when the idea was first created. Berkshire Hathaway is now number 7. I haven't heard anybody suggesting that gets put into the Mag 7. So a broader thinking around market construction.
Lizanne, got to leave it there. We look forward to getting you on again soon. Lizanne Sonders, of course, at Conic with Charles Schwab. A Bloomberg Surveillance this morning brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, treasuries, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. Okay, I just want to talk to Ira about Premier League football. Paul, why don't you bring him in and have an adult conversation about the bond market?
Absolutely. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. Ira, what did you make of the jobs number we saw today? And more importantly, how do you think the Federal Reserve is going to look at this?
Yeah, I think the Fed won't be particularly pleased and may use this as an excuse to say, hey, look, clearly the job market's not doing that well. It's a good thing that we cut 50 basis points. I think some people might see today's data and look through it because there was 500,000 jobs that weren't people not working because of the hurricane, and it's very noisy data, this particular report, But overall, I think the Fed is gonna be pleased with the fact that you still have wages growing, even though it seems like in aggregate the job market continues to slow somewhat, regardless of some of the noise around today's headlines.
So this Fed here next Thursday, Ira, I guess it's 25 basis points. What do you think the messaging is going to be next week?
Yeah, thanks, Paul. I think the Fed is going to cut 25 basis points. I mean, I think they have to, and I think this data kind of clears the way for that, just given how weak it was, and in particular things like the revisions to the payroll report. But then I do think that Jay Powell will hit really hard in the press conference about whether or not they are going to need to cut again in December. Like, he'll say that we're really data dependent. If the data continues to come in really strong, there's the possibility we'll reevaluate and skip December and then look to see thereafter if we're going to cut again in January. The market right now, at least I haven't looked at it the last 5 minutes, but had been pricing basically for the Fed to cut in December over about 3/4 of a cut, right? So more likely than not, the market was saying that, but I suspect that could wind up being less than 50% chance of a cut in December after Jay Powell speaks at the press conference next week.
So at the press conference next week, they have, I'm sorry, I refuse, Ira Jersey, to say they're politically motivated. I'm sorry, folks. I'm hardwired to this. They don't follow the election. If they're election free, what do they do in the lame duckedness out to the inauguration late January?
Yeah, I don't think that. I think that they're just going to use the data as an excuse for whatever they think they need to do. And I do think that most members of the Federal Reserve, regardless of who appointed them, whether it was Donald Trump or Joe Biden or President Obama for that matter, for a few of them, I don't think that they're motivated by the politics of it. Now, they do have to take into account what is going to happen in terms of fiscal policy, but we don't know what those fiscal policies are going to be, and we won't next Thursday, right? We won't find that out until sometime next year when we get the next president's budget, whichever candidate ends up winning.
We're watching Penn State, Ohio State. The Bruins are having trouble. Good morning, 92.9 FM. At the Jersey House, this is all they're listening to.
Halfback passes to the center. Back to the wing. Back to the center. Center holds it. Holds it. Holds it.
Ira Jersey.
Passes to center. Back to wing. Back to center. Center holds it. Holds it. Holds it.
Oh, Ira. Aston Villa, Tottenham. I've aged watching Tottenham. They lose to Crystal Palace, which is like losing to Ted Lasso. And then they take out Man City. Help me here. Are Tots heading for relegation?
I don't think so. I think they're too good of a team. And producer Rich said I'm not allowed to talk about soccer, so I'm going to leave it there.
We're doing a force majeure here. We need so Aston Villa's for rear this year. Can they compete with the big money teams?
I think the issue with Villa is playing in both the Champions League and the Premier League. Their squad depth isn't quite deep enough probably to do really well in both competitions. So they're going to have to pick one. A lot of people will say, oh, well, they should really focus on the Champions League because if you make the group stage of Champions League, it means more money, and next year they could do even better. But then again, you want to be in the Champions League next year too. So there's a kind of give and a take that you have to make a decision about.
Ira, Cy Benson in the control room just put 3 stitches in his forehead, banging his head against the Bloomberg terminal. Ira Jersey, thank you so much. I'll be watching the Tots Aston Villa Sunday morning. There it is, Paul.
Yep, there it is. I mean, you got
After
a lot
Penn
going on this
State,
weekend.
Ohio State. Are you going to the game, seriously?
I'm not, but I think Mr. Dan Ives from Wedbush Securities will be making it.
It's a beautiful stadium, like the autumnal afternoon kind of thing.
Sure, it's perfect. Happy Valley, 107,000 plus people.
Really? That big?
Yeah,
I didn't know that. So it's Michigan size.
Yeah, it is. And, they probably acres, literally today, acres around the stadium are already completely packed with RVs and people camping out.
Plus, you can get an education.
You can get an education. Great engineering school, great business school.
Yeah.
So they do it all out there.
There we go. I-80. What's it, college? State College.
Station. State College, yeah.
State College,
Yep,
Pennsylvania.
Happy Valley.
So thank you, Ira Jersey, for that. He'll publish today with Bloomberg Intelligence on the bond market. Excuse me, forward. Futures advance, that's what you need to know. And you really wonder, what do they do off the election on Tuesday? We've got our election coverage coming up on Tuesday, 5 p.m. Joe Matthew, Katie Lyons, it's 7 o'clock. John Farrell and AMH show up as well. Good morning.
At least until I die. Damn if you do, damn if you don't. I'm supposed to get a raise next week, you know damn well I won't. Working for a living, working for a living, working for a living, living and working. I'm taking what they're giving, cause I'm working for a living.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in that fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. We really begin our election coverage at this 9 o'clock on a Friday, out to Tuesday. David Gura to be with us here in moments with his real interesting tick-by-tick perceptions as well. Jobs Day. Paul, what did we learn other than the market lifted, futures up 23, futures up 27?
Yeah, I think the market's trying to figure out, what to make of this print to 12,000 change in non-farm payrolls. Consensus was 100,000, but we do know that there's a lot of noise in that number. Unemployment rate sticks right there, 4.1%, Tom.
It's going to be interesting to see. Bloomberg Surveillance this morning and all of our economic work. We say thank you to Commonwealth. Commonwealth supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support and technology. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
And we've got futures advancing after the latest data showed, as Paul said, U.S. added just 12,000 jobs in October, and that was really way below the 100,000 estimate. The unemployment rate held at 4.1%. Hourly earnings remained firm, all in a month that was affected by hurricanes and a major strike. We have NASDAQ futures up 0.4%, Dow futures up 0.5%, S&P futures up 0.4%, or 26 points. We have the two-year yield, 4.08%. That's down 8 basis points. The yield on the 10-year, 4.24%, and that's down 4 basis points. To commodities, oil gaining, renewed tension in the Middle East. Right now we have Brent crude up more than 2% at $74 a barrel. WTI crude, $71 a barrel. We have spot gold at $2,757 an ounce. Big day for oil companies. We had Exxon up 2%, beat analysts' estimates. Third quarter earnings, that was thanks to higher oil production from the Permian Basin. Chevron up more than 2%. Reported similar news, but it also indicated potential U.S. job cuts, part of that $3 billion cost-cutting plan. Amazon and Intel shares, they are higher. Optimistic earning results. We have Amazon up 6%, Intel up 6%. Apple shares lower, down more than 1.5%. Reported softer demand in China. And finally, shares of Globalstar, they're up 40%. It agreed to deliver expanded service to Apple. That's over a new mobile satellite services network. That is your Bloomberg Business Flash. Paul and Tom.
Thanks so much, Lisa. Greatly appreciate it. Tear in our eye. He'll be on the Sikorsky out west of Pittsburgh, I might say, towards Indiana University of Pennsylvania. David Gura joins us now off of Wisconsin. He's the one who said to me, Tom, shut up. It's Arizona that matters. But now there'll be the trek east for David Gura. He will end up, Paul, election night, 16th Street, Philadelphia, Monk's Cafe.
Oh, that's a nice one.
This is they serve 400 beers, including Iron City beer. And David Gura will be there. I want to go to Connor Lamb.
Okay.
Conservative Democrat, ran against Fetterman, lost. Out in the wilderness now of Democratic politics. What is Connor Lamb's best outcome in Pennsylvania Tuesday night?
That's a great question. I mean, I think this is going to be another tight race. And, I as you say, just came back from Wisconsin where the candidate whom I was following there, Tammy Baldwin, was talking about how she's in a 50-50 race. It's on a razor's edge. We've been talking about this as it's manifested itself in the polls over these last many months. But these candidates are living it. And this has been a long slog for them. But nobody's taking anything for granted here, I think, in these final few days. And something that stood out to me as I was there on the campaign trail is the attitude is every vote matters. And we've talked a lot about these kind of mythic, undecided voters. That's not who these folks are focusing on now. It's getting people who have voted in the past but might not have last time or the time before that to recognize that it's important to get out there, mail that ballot in, or go to the polls in person.
I mean, I put boxes of Amazon outside my door last night so the kids wouldn't trick or treat there. I mean, Paul, and that's how antisocial I am. David Gura, does knocking on doors matter anymore?
You know, I talked to a number of Tammy Baldwin's supporters, some of whom are in unions. They're being organized by their unions to go out. Maybe they don't even live in Wisconsin. They live in Minnesota or they live in Illinois. And the strategy has changed. It's not just kind of randomly knocking on doors. They're being targeted. Go to this Democrat's house. Go to this person who has voted for us in the past and might do it again. They're not doing the kind of cold knocking where it's going to be a Trump supporter who's going to shoo them off their front lawn. They're really, again, trying to get those who have been committed in the past and might be. But yes. And what the refrain was is explain why you're doing it, why this election's important, and seal the deal at the end. Try to get that person to say, you know what, great to talk to you.
Yeah.
I'm going to show up at the polling place on Tuesday.
How touchy-feely? Paul, have they knocked on your door?
I haven't knocked on my door, thankfully. They're welcome to Jersey Shore anytime. David, if it is a real story to get the vote out, is there a feeling when you were in Wisconsin or that maybe one side's doing a better job than the other, has got a better on-the-ground apparatus?
We know more detail about how the Democrats, how the Harris campaign is approaching this. They're very forthright about how much money they have and how they're deploying that across the country. But the Trump campaign, in its memo to interested parties, as they put it, say that they have a very strong ground game. They're confident in how that's going to play out here over these next few days. But when you look at the sheer number of people who are out there on the payroll, it is the Harris campaign that has the edge. And you see that just in the way that the candidates are approaching this race. Yes, Kamala Harris is doing big events. Donald Trump is doing big events. But I think it's safe to say he is relying more on the spectacle and celebrity of these big arena events than she is thinking that's going to trickle down to voters and get them animated.
David, as you know, all the experts are telling us this is a toss-up here. When you're on the streets in Wisconsin, does it feel like a toss-up? Does it feel that tight?
Yes, it feels extremely tight. You hear that from the candidates. You hear that from those who are organizing for them. You hear that from the voters themselves who are fatigued, tired of all the ads that are everywhere, the ads that are on TV, the ads that they're seeing on the side of the road as well. I mean, every other billboard is a political ad, either from the candidates or one of these political groups. So they're inundated by it, but there is this broad recognition that in that state, in particular in Wisconsin, but also Pennsylvania, things have changed. The terrain has shifted. It's a closer race than it has been in the
David,
past.
Charlie Cook writing a gorgeous essay here like 2 days ago as well. He talks about the lack of landslides, and then he's got a 15-line paragraph going from Bush-Gore all the way through to Trump 2016, then on to Joe Biden. And he's talking about the narrowness, the reality of the narrowness. So Pennsylvania, is it going to be 10,000 votes?
I think it's going to be extremely close. And I know that there are some skeptics who say maybe the polling is wrong or there's something about it that's not quite right. It's going to be a wider margin yet. What we do have in Pennsylvania, which is interesting, is some visibility into these early votes. who the state sent them out to and what parties they're affiliated with and which have come back. And so you see Democrats having an edge there. Fascinating, the story this morning. We've covered it. The Washington Post is covering it. New York Times covering it this morning as well, is the role of white women in the country broadly and in Pennsylvania in particular. It's a real difficulty for Democrats to claim them as supporters. And we look at the last election, Trump had them by a margin there. You look at the one before that, Hillary Clinton was the candidate and still wasn't able to secure them to the extent that Democrats wanted them and needed them to do. So that is a big push for the Harris campaign and for Democrats now, is to go after that 30% of the electorate, which is, frankly, a part of the electorate who does show up on Election Day, does get to the polls.
Do we know who the undecideds are? Like when you're on the streets in Wisconsin, does somebody have a sign around their neck? I'm an undecided.
That's brutal, Paul.
They're ordering the spotted cow at the bar. And, no, I mean, I think that we have some vague sense of who they are, but I think that they're a rarer bird than we've been led to believe. I think that, again, for many months, that's who we thought these campaigns were targeting. At this point in the game, I don't think they've given up on them, of course, but I think that there is just such strange mystique around what might be motivating somebody like that to sit on the sidelines as long as they have, that now it's like that's not where they're placing their efforts.
So do you anticipate at 11 o'clock at night, you're going to be on either your Dogfish Head Rodenbach Crimson Crew, or you're going to be looking at your Crooked Stave member Barry Syrah 2016 beer.
I need Tom as my producer.
With AMH. You're going to be on with AMH at 11 p.m. and we don't have a clue, right?
Well, look, I've been in touch with all of these election offices across Pennsylvania. I say, what's the plan going to be? Most of them have these online dashboards, and they say, come 9 o'clock Eastern time, Wall Street time, for those in the audience, they're going to begin putting those unofficial results up. We might have a good sense of where things are headed directionally that evening. They're not going to call, my bet is, they're not going to call that race for several days officially. There's going to be a lot of, very, very specific counting of votes, and then I think there is the specter of sort of legal action that might come in the days that follow.
$12. Chicken liver mousse with pickled mustard seeds, house-made jam, and a beer of your choice.
Nice.
I mean, that's Gura's living large.
I did have a Butterburger in Wisconsin and some cheese curds at Culver's.
What is a Butterburger?
Butterburger is a Culver's tradition. It is a buttered white bread bun with the burger. I was told to get it. It was.
you survived?
Slaked my hunger. I survived. I made it through the rest of it.
Well, now he's getting cheesesteaks. He's
Brooklyn diet. He hasn't had meat since Nixon was
president. Exactly.
One in Rome.
Cheesesteaks in Philly.
Safe travels. Seriously,
Thank you
you're
very
going to
much.
go across
I know we'll be in
Philadelphia?
touch. Yeah. Down to Philadelphia, and we're going to spend Monday and Tuesday in those, fabled suburbs, Bucks County, and the lot. Where
15 seconds. 6 weeks ago, you said Arizona matters. Still matters?
Still matters, but now I have to say selfishly, Pennsylvania's the state to watch.
Okay.
Exactly. I'll be watching it.
Look for David, Monk's Cafe, Philadelphia, election at night. Probably, I assume Barr will go down
I can
there.
put it on your card, right, Tom?
Of course.
No, it's on Redo. Redo, keeper of the Amex, is in charge of all of Monk's Cafe receipts as well. We have election coverage for you. That's coming up Tuesday night, 5 p.m. Joe Matthew and Katie Lyons. Not the same conversations, distinctive and different conversations. And then John Farrow and Anne-Marie Horton joining at 7 p.m. And they will take you out to when Gura closes down Monk's Cafe at 1 a.m. or 2 a.m. As well. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. With 4 days left until Election Day, Vice President Kamala Harris holds 3 events in Wisconsin today. Former President Donald Trump will rally in Michigan and Wisconsin today. Meanwhile, supporters of both candidates were on stage yesterday with the presidential candidates. Former Republican presidential candidate, now Trump supporter, Robert F. Kennedy Jr. spoke last night at a rally in Arizona. He told the crowd that he feels that the news media are driving a wedge between Americans.
Somebody called me one of the anchors of ABC today, and I had an off-the-record discussion with him. And he said, there's so much division in this country. And I said, that's because you're causing it.
Meanwhile, singer Jennifer Lopez brought star power to a Harris campaign rally in Las Vegas last night.
Kamala Harris is running for the people who dream, for the parents working overtime, the kids studying by streetlight, the teenagers practicing in the basement.
Just days before the election, Jen Easterly, director of the Cybersecurity and Infrastructure Security Agency at DHS, says that several foreign countries, including China, Russia, and Iran, are spreading misinformation online about the safety of our elections.
They want to sow and stoke partisan discord. They want to pit Americans against each other, and they are looking for any opportunities to create rage.
CISA Director Jen Easterly spoke to ABC. The death toll from historic flash floods in Spain climbed to at least 205 people today, with many more believed to be missing as the initial shock gave way to anger, frustration, and a wave of solidarity. Spanish emergency authorities said 202 of the victims were in the Valencia region alone. Secretary of State Blinken says the U.S. expects Russia to begin mobilizing North Korean troops in the coming days to fight Ukraine. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Total revolt. I mean, the control room's not even going to show up Monday, Paul, if we don't rectify this soccer talk of Tots Aston Villa Jets. Garrett Wilson, one-handed TD grab
Crazy.
On the edge of ballet.
Yeah. Touchdown.
It's a resurrection. Jets playoff bound.
I don't know about that, but it was a good game, good win. 3-6, as Ari pointed out, but apparently his shin hit the ground.
Yeah,
and that counts
I'm
like
watching
a knee.
it right
So
now.
I don't know.
There's a foot. Yeah, okay. I think he got the left foot down.
And then the shin.
Okay, that's our football talk for the day. We'll do soccer talk in the next hour. Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And the futures report brought to you by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indices, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. All right, we got futures on the rise. This is after hiring advance at the slowest pace since 2020. That was in October, while the unemployment rate held at a low level. Right now, we have NASDAQ futures up 0.3%, 73 points. Dow futures up 0.4%, 179 points. S&P futures up 0.4%, or 24 points. We have the two-year yield 4.09%. That's down 7 basis points. A yield on the 10-year 4.25%. That's down about 2 basis points. To currencies, we have the dollar weaker, Japanese yen weaker. It's at 152.16 against the dollar. The euro weaker. We have British pound stronger. We have Bitcoin at about 70,000. Shares of Boeing up 2%. The company and union leaders, well, they reached a tentative agreement, but members still have to vote on that new offer on Monday. And over to Nomura Holdings, quarterly profit more than doubled from a year earlier, beating estimates, but it's being overshadowed by a number of scandals. Their shares down 2% in Japan. And shares of Boston-based Wayfair, well, they're seeing a nice lift. They're up this morning after earnings beat expectations. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. One of the great things we have done in the last 3 years is build out the Bloomberg economic coverage. It is a global effort, including Barcelona, obviously in London as well, over on the Pacific Rim. And the leadership in America has come with Dr. Wong out of the Booth School, Chicago. We are thrilled that Anna Wong would join us today. She did an essay 2-3 days ago, which I read every word of, which of course, with Anna Wong clarity, nailed this jobs report, and she joins us right now. Anna, if Jerome Powell read your essay, or his people, his interns read your essay, and they see the data today, not so much how does it change the 2 day after the election Fed meeting, but how does it change their vector analysis into 2025?
Yeah, I think that to some degree, the Fed considered that it's possible the payrolls could be this low, because we did hear from Chris Waller a couple weeks ago, and he mentioned that the weather effect could be more than 100K. And today's payroll report suggests that it's likely more than 100K. That said, I do see some weaknesses in today's payroll report that's unrelated to weather. And the reason why our team was able to forecast the payrolls report today so close to the actual was because we noticed a very broad-based weakness in professional and business hiring. And this is actually dispersed quite across geographic regions. So it's not just in Florida. I think the Fed staff will be poring over this data today, and we'll see what we saw, which is that there is still some cyclical weakness, and the unemployment rate should be rising from here on out.
Chris Lowe over at FHN Financial, Paul Sweeney, says it was clobbered by the hurricanes, but he agrees with Dr. Wong. There's something else going on here.
Something else going on. Anna, why do you think the unemployment rate, at least the headline's pretty steady here at 4.1%? Is that a good reflection of where we are?
Yeah, Paul, everybody now is looking at the unemployment rate at 100th decimal point. So it actually rose from 4.05 to 4.14, which is actually quite substantial.
It
so So we, part of what's going on is that the election, we have documented that this is the costliest election ever. And there's a tremendous amount of spending on protective services in government services in swing states. And so we have seen that this is supporting the household survey to some degree. But that should go away in December. And that's another reason why we do think the unemployment rate is going to rise quite sharply towards year end.
Well, stop. Cut with the suspense, Dr. Wong. Are we popping 5% sometimes out towards spring training where the Yankees re-justify themselves?
Tom, you just spoke Greek to me. I don't understand any of
Okay, out in the Citrus, let me speak in English. When the Citrus League dawns in Tampa, and I think it's February 22nd, are we going to be popping a 5% unemployment rate?
I think February might be a little bit too soon for a 5%. If our forecast came to pass, I think it would be in the second half of next year.
Just so you know, Robert Thaler, Cubs fan, would have nailed that in Chicago.
Missed it. Wages, Anna, we got on an annual basis still kind of clocking in there around 4% average hourly earnings growth. That seems pretty darn solid for the working folks out there.
Yeah, so a lot of the weather, what the weather did to the payrolls is that it knocked off these lower earnings jobs out of the payrolls, and that should artificially boost the average hourly earnings. And I think that's what we are seeing, because earlier this week we did get the ECI Employment Cost Index, which holds this compositional effect constant. And that's the one that the Fed pays more attention to. That is suggesting wage growth is softening.
So, but again, we're still above inflation there. So I guess the question for the consumer out there, the consumer's real purchasing power, is it still positive?
I think cumulatively in the past 3 years, not.
Okay.
Not.
All right. So where do we go from here with this labor market? I mean, and more, I guess more importantly, where do you think the Fed believes this labor market's going to go? Are they watching it to see if we see this tick up in unemployment to a level that maybe they're not comfortable with?
Well, before today, it looks like unemployment rate would be undershooting the Fed's forecast of 4.4%. I think right now this payroll puts it back on that path to meet their forecast. So it's not that today's payroll is grossly weaker than what the Fed thought. It actually gets back on that trajectory. So it would be entirely consistent with a 25 basis point cut next week and another 25 basis point cuts in December.
I look at it, just one final question here. I guess revisions are everything. When do we get beyond the noise? Is it the first week of December, the first week of January? Dare I say the first week of February to get out noise-free?
Oh my! I mean, in the first 3 months of next year, we're gonna get a lot of noises on inflation too, because there tends to be residual inflation in the first 3 months. So it could look as if that inflation is picking up in the first 3 months of next year. On the other hand, jobs could also in the first 3 months of the year super noisy. I would say December's payroll would be the first one where it would be not as noisy. But then after that, it will be interrupted by noisiness.
Thank you so much. Greatly appreciate it. Dr. Wong with Bloomberg Economics. I really can't say folks enough. You'll see her publications, particularly she does a killer job along with all the team out on LinkedIn. Huge value to go out to LinkedIn to follow Anna Wong and Bloomberg Economics. Election coverage Tuesday night. We have an incredibly special treat for you Monday. We are thrilled to tell you moments ago learning that Bob Woodward of the Washington Post will join us Monday in the 9 o'clock hour. We're not going to do the Trump-Harris. Page 342, Bob Woodward. What did you say? We're going to talk to Bob Woodward for all of you voting Republican, voting Democrat, in the middle, what is it, 1.2% undecided voters?
I guess.
We are going to talk to Bob Woodward about the length of American democracy from his work with Carl Bernstein in 1971-72. What a great way to end up towards the election.
Tee us right up for the election on Tuesday, Tom. So Bob Woodward will be a welcome discussion.
Maybe the House. I should have the troops at the House watch the movie this weekend.
Yeah, absolutely.
I mean, he sort of looks like Redford.
Sure. Yeah.
I mean, I can see it.
I can see that.
Bob Woodward with this 9 o'clock hour, just get goosebumps off that. It'll be just really a privilege to have him on. Whatever your political background, we're not going to get into the angst and the anger of America that we see across this weekend. Again, David Gura with our coverage across Pennsylvania. That leads us to election coverage Tuesday night, 5 p.m. Matthew in lines, and at 7 o'clock joining John Farrow and AMH. AMH will show up. She burnt her Yankees jacket. I saw her do it.
No.
It was like the Pope. There was white smoke coming out of our world headquarters. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this opening bell report brought to you by JP Morgan Asset Management. Stay informed on today's fastest growing investment vehicle with new guide to ETFs. Visit jpmorgan.com/ETFs Insight to learn more. All right, how are we going to kick things off after the latest major data point before the presidential election showed U.S. added just 12,000 jobs in October? That was way below the 100,000 estimate. Let's see as we get things started here. The S&P 500 will start there, up 0.4%, 23 points at 5,728. The Dow up 0.4%, 190 points at 41,951. The Nasdaq up 0.5%, about 97 points at 18,190. We have the 2-year yield, 4.12%. That's down 5 basis points. The yield on the 10-year, 4.27%. That's down 1 basis point. To commodities, we have Brent crude $74 a barrel, WTI crude $71 a barrel. Taking a quick look at currencies, we have the dollar, Japanese yen, euro weaker, British pound stronger. We have Bitcoin at around 70,000. At the open, we're also checking with Amazon up 6%. Same for Intel, Apple down nearly 2%. That is your opening bell report. Tom and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. The Bloomberg Sports Report today was brought to you by Audi. Visit your Tri-State Audi dealer today and get behind the wheel of the Audi model you've always wanted.
Ira Jersey publishing moments ago with Will Hoffman. Let me quote it exactly, Paul. He joined us here a while back on Aston Villa Soccer. That was the high point of the show. Quote, yesterday, they suggested, this is Anna Wong's team, they suggested Fed Chairman Jerome Powell might prepare the market for a December pause in the current rate-cutting cycle. Mr. Jersey stays with that.
Okay, all right.
No mention of Aston Villa,
I've heard
Tottenham.
it referred to, a skip. Okay.
Oh, okay.
We'll pay attention to that. A pause, a skip.
A skip. I like that. I haven't heard that as well. Okay, get out the map, folks. I mean, the line is Tiffany Wilding's working today. You know, you go up Interstate 5.
Okay.
Traffic is terrible.
Crazy.
From Newport Beach. And, you know, you get up, you know, you get past Norwalk. You know, LAX is out there, and it's really, I mean, it's a long way to the Dodger Parade.
I know.
But somehow she'll do it.
She'll get there.
You know, be a backdrop. She'll have Chevis Ravine behind us. Joining us now from the land of the Los Angeles Dodgers, Tiffany Wilding with the Pacific Investment Management Company. We just covered this with Anna Wong. Dr. Wong just nailing the shortfall here. Tiffany Wilding, what is the character of the shortfall in our jobs report besides hurricanes?
Well, so you want to try to think about the underlying trend in the economy, and any given data point will have idiosyncratic factors. Obviously, we had 2 hurricanes. We also had a strike at Boeing that impacted this data. And when we kind of smooth through that noise, what we see is a labor market that is still gradually easing. We think that about 100K of the weakness was related to one-off factors. You add that back. You know, that's about 100,000 jobs that were created, and you know, that's still, you know, not great. So you know, so we kind of think of this as something that keeps the Fed on track, continuing to cut interest rates. We think they will cut by 25 next week, and you know, maybe December is now a little bit more of a question mark. But our own view is that they cut 25 in December at this point as well.
Tiffany, just stepping back from this report today, what is your just overall view of this U.S. labor market? How strong is it? How solid is it? How are the near-term trends? What's your view?
Yeah, well, you know, I think we have a labor market that is just gradually easing. We had, you know, pretty extreme, you know, labor shortages after the pandemic, and all of that has just normalized now. And we're continuing to ease. Part of that easing is the result of an increase in labor supply from elevated immigration over the last couple of years. Those folks are still just getting integrated into the labor market. You know, and as they do, you know, it's possible we could see the unemployment rate that, you know, kind of continues to move gradually higher. You know, but that's a, you know, I think in some sense a good thing in terms of just the broader labor market dynamics. That, you know, we have a labor market now that is not overheated, and that's a good thing for Federal Reserve officials.
So, how do you think about the immigration issue? It's obviously a huge political issue, but what does it mean for the economy, for the labor market? To what extent are these folks working and taxes and all that kind of stuff? How does that play out in your numbers?
Yeah, well, so the folks that have come into the United States over the last several years, a surge of immigrants has been asylum-seeking folks, and they are legally allowed to get work permits while they're waiting on their court hearings, you know, on their asylum process. So we do think, you know, the government provides data on the backlogs for these work permits. You know, they have been about 6 to 8 months, but nevertheless, we think over time they are getting integrated into the labor market while they wait for their court hearings, and that is helping. So, you know, I think it's, you know, from an economic perspective, it has loosened the labor market. It has contributed to growth over the last several years. It's probably also boosted rental inflation in some of the larger cities, you know, that have seen a big influx.
I mean, Tiffany, you deal with some really smart people. I mean, Jerome Schneider. I mean, you know, come on. He understands the repo market. You deal with some smart heavyweights out at PIMCO, Tiffany, and they understand microeconomic ambiguity, where things can cut this way or cut that way. If we get a slowing labor economy, and let's be optimistic and say we get some form of solid GDP, we don't get the gloom of a Claudia Sahm recession or something like that, which way does that cut in the bond market? How do you advise bond pros on ambiguity?
Yeah. Well, just from a mathematical perspective, that just means the economy is more productive. If you have the labor market that's slowing, when GDP growth remains incredibly strong, then you have just good productivity performance. And that raises welfare, overall welfare and economy over time. So I think overall that's a great thing. Higher productivity growth also reduces inflationary pressures. So that's great for the Fed as well. And what it does is it allows the Fed to gradually ease interest rates, to continue to support the economy, reduces the risk of hard landings, and we can kind of keep those welfare gains over just kind of going. So we think here the Fed does have room to cut interest rates over a range of economic scenarios. We do think inflation's gradually heading back to target. Right. Labor markets back in balance make us more confident of that.
I mean, I got to get this. I have not even looked at this, Paul. I've been remiss on this. November 7, December 18th. Okay, fine. Where am I here? 2025. I'm going to get there. January 29.
Okay.
And then March 19. So 4 meetings out. Tiffany Wilding, we're out to March 19 as well. By then, the nonlinear rate cuts really begin to have impact. Can you give me a calendar date where they really have impact if they cut 25 beeps?
Yeah, well, I mean, obviously these things are uncertain, and just how interest rate sensitive the economy will be as the Fed cuts is something that we will have to just gain more information on. And I think ultimately that's why they want to start cutting interest rates. And that's why they'll probably do a sequence of cuts to see how the economy reacts, and then they can slow down a bit, or speed up if things aren't looking so good. But I think at this point, the economy was not that interest rate sensitive as the Federal Reserve was raising interest rates. And so there's a big question mark on, well, maybe it won't be that interest rate sensitive on the way down either, but they need to try to gauge that. And we think they do that by just cutting and seeing what happens.
Is the risk to cutting and see what happens, is one of the risks that inflation reignites, if you will? Some people are starting to talk about that. I'm hearing more of that over the last couple of weeks, that type of discussion.
Yeah, I mean, I think, certainly you could see an economy that starts to reaccelerate as you have capital expenditures reaccelerate as rates fall. That could certainly happen. But I think what's interesting, the interesting dynamic now, at least, is that we have seen productivity just incredibly strong in the United States. So that has broken the link in some sense for how growth flows through into inflation, better growth outcomes. So I think there's just again, this is a world of uncertainty. In that uncertainty, the Federal Reserve will go slow. They will go gradually. Obviously we have an election next week. We can't forget about that, which could have major economic effects or major economic policy impacts. So I think the Federal Reserve at this point, we are at a elevated level of rates and policy that is more consistent with pandemic-related environment, and we're moving out of that environment now.
Tiffany, one more question. Tiffany Wilding on the housing market is part of our American economy. Sweeney's apoplectic because we're going to 8.5% mortgage rates any day here. You're out at Newport Beach, where I understand the smallest boat is 75 feet. What's your view on the American housing market?
Well, so, the housing market, there is a shortage of affordable housing, and that is going to keep the housing market, in terms of activity, real investment activity, it's just going to keep it supported. And, I think the interesting thing about the current environment is just as the Federal Reserve cut interest rates by 50 basis points, you actually haven't seen mortgage rates fall. And so we haven't really seen an easing of of financing conditions for households in order to buy new houses. So, the housing market, we think, remains incredibly tight. Over time, as interest rates fall and mortgage rates fall, we think real activity, real construction activity within the housing market picks up. And that's ultimately a good thing because we have, the kind of this imbalance of affordable housing in the United States.
Tiffany, thank you so much. Greatly appreciated. An important brief there from PIMCO. Tiffany Wilding, their chief economist. The President of the United States moments ago releases, and Paul, I'm going to be direct here, a carefully crafted 3-paragraph essay on the jobs report. We're going to quote it, we can't quote the whole thing. We don't have time for that. But I can just pick just one part of this, Paul. We have the lowest average unemployment rate of any administration in 50 years. Our economy has grown more than any presidential term this century. I think that's the 21st century.
Yep.
Incomes are up $4,000 over prices, and inflation has fallen nearly to its 2% target. And there's like 4 times more of that, including Boeing and all that. I believe that's a political document from 1600 Pennsylvania Avenue.
Yep, and it's
4 days before an election.
It's interesting because that's what the data tells you. But I think if we go out and we talk to the folks on the street, all they know is they're paying so much more for stuff at the supermarket, for example, and the restaurants than they did 4 or 5 years ago. And that absolute level of prices, that's inflation to them, and that's inflation to a lot of folks. Even though, we had Matt Winkler in here, the founder of Bloomberg News, just a week ago. He had an opinion piece out showing you that, really, your stuff that you're buying at the supermarket, it's actually less of your paycheck than it was 4 years ago because wages have actually increased now. But it doesn't feel like that to a lot of people.
To a part of America, the haves and the have-nots. Here's the political sentence here, and I want to be very careful. This is verbatim from the White House. Congressional Republicans, however, are proposing a national sales tax that would cost families nearly $4,000 a year, hurt American manufacturing, and cut hundreds of thousands of jobs. Can I editorialize, Paul, that when he says national sales tax, he's talking about tariffs?
I guess. A lot of economists.
We're not talking like a VAT tax.
Yeah. You deal with a VAT tax over in Europe. But no, I think a lot of economists view tariffs as a tax on the consumer, although they may have some other benefits. But that is also one of the results.
Excuse me. And of course, that statement, fodder for 5 p.m. today, Balance of Power, Joe Matthew, Kaylee Lines, going into our election coverage on
Yes,
Tuesday.
some strong election coverage next week, Tom. So, again, people are just trying to get a sense of what the election will mean for markets, what it will mean for the Federal Reserve, what it will mean for company regulations across the board, energy and other industries as well. So lots to think about, and lots will be decided next week.
So if I go to the ECO calendar and I get out past November 5, November 5th, trade balance. I'm kidding, folks. The election will be a little more important than that. But then we get out to the rate decision November 7th on the Michigan Confidence, the 8th. And I'm we move on. That's my experience with elections. We move on.
Yeah, and that's what a lot of strategists have told us is we'll be fine.
It's
and
like
the
the Yankees blow the World Series and they move on.
They move on.
Do you see any change for the New York Yankees here?
Juan Soto is going to be a big question
You think
mark.
they can keep him?
I don't know.
Lisa?
I don't know.
I don't know if they have enough money.
Bloomberg Surveillance, good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got stocks on the rise, the world's biggest bond market climbing after the latest jobs report had boosted hopes that the Federal Reserve will cut rates next week. We'll head to the bond market. The 2-year yield 4.11%. That's down 5 basis points. The yield on the 10-year 4.26%. That's down about 1 basis point. Over to the NASDAQ, up about 0.8%, 153 points. The Dow up 0.7%, 325 points. We have the S&P 500 up 0.7%, or 39 points. Now, where is the biggest boost coming from? Well, if you head over to the IMAP feature of your terminal, the 11 major industry groups, the biggest push coming from consumer discretionary. Then you click a little bit further, you see broadline retail at the top. Yes, it is Amazon. Those shares right now up more than 6%, and that's followed by eBay, which is up about 0.5%. Moving to oil, we have Exxon shares up 1%. It beat analyst estimates for third quarter earnings, thanks to higher oil production from the Permian Basin. Then you have Chevron. They reported that similar news too. Their shares up about 4%. And finally, Boeing up 2%. And this is after the company union leaders reached a tentative agreement, but members still have to wait until Monday. That's when they vote on that new offer. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. This has snuck up on us because, Harvard had a loss there or something, doom and gloom. And all of a sudden, they're like the second best thing going in Ivy League football, in the FCS as well. And it all comes to fruition this week. And forget about Yale, Harvard. Dartmouth, Harvard is a big deal. Joining us now with our coverage, you'll see that here, 1:30 p.m. On Saturday, Bloomberg 92.9 FM in Boston. Having a brilliant first year. Andrew Orich joins us. He's Harvard or a football coach. Coach Orich, I look at Dartmouth, and come on, they got a pro guy. This guy could be at USC, he could be at Oregon. Q Jones. How are you going to stop Q Jones of Dartmouth?
Well, it all starts with we got to make sure we tackle well. He's very elusive, and then really when you play a team like this on offense where they run the ball so well, it's really about 11 guys just doing their job and not trying to make a play outside the scheme. How do you train open field tackles? How quaint, Paul.
Yeah, that's exactly. From years ago. How do you train somebody to make an open field tackle the toughest thing in football?
Yeah, well, because of the rules in the Ivy League, you can't actually do real tackling once you get into the season. So, there's drills where you're in space and you're have a guy who's playing a running back and you're wrapping up, and you can use different equipment to do simulate a full tackle, and we're implementing those. We've been using those, since I got here.
Coach, you're
They call the equipment freshmen.
Freshman, exactly.
Sacrifice a freshman. Who cares?
Walk-ons. Coach, you played at Princeton. You're a Princeton alum. You guys went in. You played Princeton last week. You came out with a 45-13 win at home. Talk to us about that game and what that meant to you, being a Princeton alum.
Yeah, it was a lot of fun. It was really our first game where we had all three phases play a full game, and I knew that we had that in us to have that result if we put all three phases together like we did. I was more happy for the players because that ended a 6-game losing streak to Princeton, and it's been fun to see them, move on to Dartmouth, because obviously this is a really big game. We're at that point in the season where every game is going to have us, in contention for the championship, and we got to reset and focus just as hard as we did for the Princeton game this week.
So Dartmouth,
as they've done.
Yeah, Dartmouth, the Big Green. I mean, I guess they're ranked 20. I don't know where they are, but they're ranked at number 22, I guess, in the 1AA, 6-0 overall, 3-0 in the Ivy League. What's the strength of Dartmouth?
Of Dartmouth, they're up in the Dartmouth bubble. All they have is water and gruel. It's not like, cushy Harvard or cushy Princeton. They're up there in the frigid tundra of Hanover.
So how do you prepare for Dartmouth?
Yeah, I mean, it was mentioned they run the ball extremely well. It's funny because I was out of the Ivy League for 4 years, and when I came back, Dartmouth is still Dartmouth. They have an identity up there where they run the ball effectively, and then on defense they are really disciplined and they have great D lines, and that has carried over this year. And special teams, they challenge you because they do a lot of different things schematically. So, they're the same team they were 4 years ago when I left, and now that I'm back.
I mean, it's amazing. All of a sudden, you're 6-1. there's Dartmouth. If you take out Dartmouth, then the season, it's on steroids, isn't it, Coach?
Yeah, I mean, the Ivy League is a challenging league. The level of talent across the board is really good. So,
right.
As I told the players, it's great to be in this position where
right.
you get to the back half of the season and every game matters so much.
One final question. Are you in the heart of recruiting right now? I mean, we have children within our studio here. They're doing their applications and all that. What are you doing in football recruiting right now as everybody's applying to 47 schools?
Yeah, we're in the thick of that. And, luckily we were kind of ahead of the game in the 2025 recruiting class. So all those guys are getting their applications done, making sure everything's in. And then, because we are a little ahead, we're working on the 2026 class.
What does their essay look like? Come on, they have a question. Why do you want to play Harvard football? What do you look for in their essay, folks, besides the ability to spell correctly?
Well, I mean, I would hope they're not talking about Harvard football in their essay because they have a lot more depth to them than just as football players. That's why they're ending up at Harvard.
That's right. It's recruiting at the Ivy League. It's a whole another game, Tom.
Coach, thank you. Andrew Orrick, all of a sudden, Harvard with a really substantial track record. This is their big game, 6-0 Dartmouth. They go up to Dartmouth to see what that outcome will be. Focusing on that outcome, and you can do it 1:30 p.m. Eastern. Pregame starts 1:15. Bloomberg 92.9 FM Boston, Harvard football, and look for that. This year. It's like Friday. It feels like we've been here for 15 straight days.
Yeah, and
I've been ill. You carried
But then
the weight.
we've got next week, Tom. What is next week going to be? And for the people like David Gura and Joe Matthew and Kaylee Lyons, that their remit is keeping us informed on all things down in Washington, D.C. and politics.
We're committed to conversations, folks, with the best we can find. There's some people that have got a right angle, a left angle, whatever that, but it's going to be really interesting. It's very exciting, and of course, leading our coverage will be Joe Matthew, Kaylee Lyons. At 7 p.m. election night, John Farrow and AMH will show up to give a truly national perspective. Gura planted in Philadelphia election night. That'll be, critical as well. So we'll see. Right now, futures were up 23. The S&P is up 45. There's a pop here to the market. Why is there a pop? I mean, is it like we're beyond Mag 7?
Yeah, I mean...
And maybe it's like getting out in front of November 6th when we're like, okay, nobody cares about the election. Let's go buy stocks.
Yeah, we're going to send Michael McKee. We'll send him down to Washington, D.C. He'll figure out what's going on with the Federal Reserve, and he'll ask his pointed question. Maybe we'll get some feeling out of Fed Chairman Jay Powell about not just September, but how he's thinking about December and into next year in terms of interest rates.
I fell back to dollar, a little bit of dollar weakness, fractional yen, 152.45, worth watching into Sunday evening here in America. And of course, I always go to the 10-year real yield, 1.94% in a little bit, but it's got more room to go there as well. I mean, Bloomberg Economics, Anna Wong, Ira Jersey said 2 months in a row, she's nailed it.
She has. Hey, I'm going to call out Bitcoin for you, Tom, because I know you're looking for that. We're just under $71,000 per token, up 1.4% today. And gold for our friend Dennis Gartman, Tom, up again today, $2,757. Gold, that has just been the charm for a number of years, and Dennis Gartman's been,
wow, look at that.
Just been spot on.
30 seconds here. Team election coverage. Is the congestion tax, John Tucker, part of election coverage?
No, we put that off to another election, so not an issue.
But just in case, we have all the cameras are up and ready, so we're ready to go.
The gantries are ready to go for anything.
Okay. We need to thank our staff. Cy Benson, thank you so much. With terrific Yankees coverage there. Seems ages ago, the Yankees, they were ahead 5-0.
Yeah, they're all down in the Caribbean on a beach.
Lucas
they're
Shaw at the parade today out in L.A.,
yes.
And he'll be with Haley Koufax. He'll be behind third base at Chavez Ravine for Dodgers celebrations today. Look to Lucas Shaw for the best of Hollywood coverage, including the streaming debacle, the budget debacles of Hollywood that Paul's been so good on as well. The Dow up 317 points. The VIX says it all from a 22 into 21.52. We say thank you. Our global technical director, Ken Fellio, thank you. Cy Benson, thank you. It's Bloomberg Surveillance. Good morning.